Yes, people, a very, very happy evening to all of you. What an energy. So, guys, we're starting with a brand new chapter today, which is framework for preparation and presentation of financial statement. Last chapter, what did we complete? Applicability of accounting standard. Fantastic. So, let's begin, people. Mark this chapter important. The reason being, from examination point of view, not every attempt you get question from this chapter. You'll be wondering then how this is important, sir. Important in the sense, in whichever attempt the question has come from this chapter, a solid scoreable question has come for 4 to 5 marks. But a lot of people omit this chapter and go. Because of which, an easy 4 to 5 marks which is scoreable, people miss it out. Got it, not got it. I tell in CA, 1 mark can make a huge difference. 1 mark can pass you or fail you. 1 mark. 1 mark can make you a rank holder or a non-rank holder. So 1 mark has such a huge difference. Imagine 4 to 5 marks from this chapter. How much game it can play with you. So mark this, very, very important. We have at least 20, 25 plus questions. 1 second. We have at least 20, 25 plus questions in PEP, MTP, RTP, all put together in our scanner. In our scanner, we have all put together 20, 25 questions forming part of MTP, RTP, and PEP. So do you consider this chapter as important or not? Yes, important in the sense we are not skipping any chapters from examination point of view. All the chapters we are going to study and go. With that positive note, let's begin, people. The first thing that we have to understand is what is the meaning of framework. What is the meaning of framework? I'll just read it for you, then I'll explain. Meaning of framework. The framework lays down the basic concepts, assumptions, principles for preparing and presenting general purpose financial statement for external users. How boring, sir. Explain first, then read. Okay. Now, Balaji is confused. This framework, we have heard this word somewhere else in chapter 1. Where did we learn this topic? I mean, this word called as framework. Yeah. Yes. So when I was discussing with all of you the meaning of gap, I said gap is a framework. Gap is a framework within which all the countries are supposed to develop their accounting standards. All the countries are supposed to develop their accounting standards. Here we are talking about framework. So what does this mean? Let me explain. This is called as gap. People are telling frame, people are telling square. CA cannot see this as square. We are talking about gap. What is this? This is called as gap. What is the full form of gap? Generally accepted accounting principles. Wonderful. Accounting experts worldwide said that if any country is coming out with their accounting principles, ensure that your principles are coming within the framework of this gap. So gap framework has been given. Gap is not very strict. It says that depending on your country's economic conditions, business conditions, legal conditions, you can modify the principles the way you feel like, but that modification should be well within this framework. So India, considering their economic conditions, business conditions, legal condition, had come out with a framework which is well within the gap framework. So this is called as framework. What framework this is? This is Indian gap framework. What is it called as? Indian gap framework. So the black outer line, what I've drawn, is called as gap. It's a broader framework. It's a very broad framework. Within that framework, we have developed something called as Indian GAAP, which is nothing but a framework. Within this, we have constructed a framework. What is a framework? Framework is consisting of certain basic accounting concepts. There are certain assumptions, certain principles which they have outlined, within which they are supposed to develop something called as accounting standards. So within this Indian GAAP framework, we develop something called as accounting standards. Within this framework, we're developing something called as accounting standards. Any problem? Now the question that should come to your mind is, sir, this part what Indian GAAP is not covered. What is it? The outer part which is not covered is basically something which is not suitable to our economic conditions, business conditions, and legal conditions. So we have left it out. Got it, not got it. Maybe some part of that might get covered under Ind AS, and some might even not be covered under Ind AS. Got it, not got it. Okay. Then based on GAAP, we have developed Indian GAAP called as framework. Now between this framework and accounting standard also, there's a slight gap. So wherever you don't get a solution from accounting standard, you will look up to the framework to get a solution for the problem. There could be certain ways in which accounting needs to be done, but which way, what problem, we don't know. There's a problem. There is no accounting solution for it. AS does not give any solution for it. So we will look up to the broader framework to derive the solution. What about it? I'll discuss in some time. Got it, not got it. So basically there's an outer framework called as GAAP, which is accepted worldwide. Within that, every country comes out with their own respective country's GAAP. So India, we call it as Indian GAAP. It's a framework within which the India, especially ICAI, has to develop the accounting concepts, principles, and rules and regulations, whatever you say. And that is what they've developed called as AS. AS you say, Ind AS you say. It is all coming within the framework of Indian GAAP. Got it, not got it. Okay, not okay. Okay. Now let's go back. So what is a framework? Who has developed this framework? This framework has been developed by ICAI. ICAI in India is responsible for developing accounting related framework. So the framework lays down. So this framework, what ICAI has developed, what does it do? It lays down some accounting basic concepts, some accounting assumptions, some accounting principles, which will be used for preparing and presenting, to prepare the trading P&L account, to prepare the balance sheet, and how to present those data in the financial statement. It will help us in preparing and presenting general purpose financial statement. What is the meaning of general purpose financial statement? The financial statement that we normally prepare is called as general purpose financial statement. It's not got any deep meaning to it. Normally financial statement that we prepare is called as general purpose financial statement. And this framework will be adopted by whom? It will be adopted by the enterprises. This document, what they're preparing for whom? For external users such as investors, lenders, etc., etc. In schedule 3, we have discussed the 7 users of financial statement. Today again I'll be discussing those 7 users, little bit more in depth maybe. So this financial statement that we prepare is prepared for the 7 users of the financial statement. Got it, not got it? Okay. Sir, this framework will help us to prepare and present the financial statement. Is that all? No. This framework will also assist ASB. ASB ka full form? Accounting Standard Board. It will assist ASB to provide fundamental basis for development of new standards. So whenever ASB is thinking about developing new standards, addressing new accounting problem, they will have to go back and refer the framework. They will go back and check whether am I within the framework or not. The new accounting standard that I'm developing is within the framework or not. Is it going outside the framework or not? Like that, they take this as a base. Not just that, they also keep on reviewing the existing standards on time-to-time basis, whether it is well within the frame or not. Got it, not got it. So framework is basically an outline perspective upon which the accounting concepts, assumption, principles are laid down. Got it, not got it. Any difficulty here? No problem so far. Okay. So what is the purpose of this framework? What is the objective behind this framework? The first purpose is to help the enterprises. It assists enterprises to prepare financial statement as per accounting standard. The accounting standard is said, accounting standard 2 said what? Inventory should be valued at cost or NRV, whichever is lower. Like that, so many standards are telling so many rules. But how do we present them in the financial statement? Like that, we need some guidance on that. No. So that guidance is being given by framework. That guidance is being given by framework. Now, tell me one thing. Those are going to appear almost for September examination. Your syllabus is almost over. Anywhere in any accounting standard, have you come across, have you learned how to prepare trading and P&L account? Any accounting standard teaches you how to prepare the trading and P&L account? No. How the data should be accounted, how the accounting data needs to be recognized, measured, disclosed, presented, that will be given. But how the overall presentation should be done, is that given anywhere? For companies, that has been given in Schedule 3. The format is given in Schedule 3. If I'm a non-company, what format? T-shaped format, that is horizontal format, vertical format. What should I follow? So that is something which is being given by framework. Got it, not got it? So the framework what we're talking about is going to help enterprise. It will assist enterprise in preparing the financial statement as per accounting standard. I want my financial statement to be as per accounting standard. So a lot of information is missing in accounting standard. That is something I'll fetch from this framework. It assists enterprise to prepare the financial statement as per accounting standard, deal with topics which is not covered by accounting standard. Also, there are certain topics which is not covered by accounting standard. So where do I go and refer? I'll go and refer the framework. I'll go and refer the framework. I'll go and refer the basic concepts given by framework. I'll go and refer the assumptions given by the framework. I'll go and refer the basic principles given by the framework. Whether I'm following the rules or regulations within this framework or not, I as an enterprise has to check. Got it, not got it? Got it, not got it? Okay. Example. A company faces a new type of transaction which is there in recent years. There's something called as cryptocurrencies. People deal with cryptocurrencies. Now, there is no standard as on date who talks about how to do accounting for cryptocurrency. I'm talking about AS. I'm talking about AS, which is not covered by any AS. So it uses the framework principle to decide proper accounting treatment. So all those enterprises who are not coming under Ind AS, which means they are coming under AS, they will use the framework model or framework principle to decide how to do accounting for cryptocurrencies. Direct solution is not given. What have they given? They have given the accounting concepts, assumption and principle. So we have to decide based on this what would be the best accounting treatment. Got it, not got it? So any topic which has been not covered by accounting standard, if any topic is not covered by accounting standard, we will look up to the framework to get the solution for. That's why if you observe this box, this part is there, no. This part is there, no. These are those parts which is not covered by the framework. So any topic which is not covered by the framework will be referred, any topic which is not covered by accounting standard will be referred to the framework. From the framework, you have to draw inferences to understand what could be the best accounting treatment. Got it, not got it? Second, the objective of this framework or the purpose of the framework is to help ASB. ASB stands for Accounting Standard Board. It assists ASB to develop new accounting standard. ASB has to consider this framework while developing the accounting standard. So gap is given. On the gap, we have developed something called as Indian gap, which suits our best economic condition, legal condition, business condition. And within this gap only, we are supposed to build accounting standard. Within this framework only, we are supposed to develop the accounting standard. So while developing accounting standards, ASB will keep the framework in the mind. Got it, not got it? Not just that, when they are reviewing the existing accounting standards, they will continuously refer, am I deviating from the framework or not? So you have to keep a continuous check on the framework. Got it, not got it? Okay. See, this framework will promote harmonization. Means what? Uniformity. To assist, it assists to bring uniformity in accounting practices, reducing multiple alternative treatment, ensuring comparability between companies. About this we discussed a lot in chapter number 1. Correct, no? The ultimate purpose of having gap, the purpose of having AS or Ind AS is what? Where we have too many options, we are going to curtail the options so that each follow limited options. The financial statement is prepared on the limited option basis so that the financial statement can be made comparable. You prepare financial statement the way you feel like. I prepare the financial statement the way I feel like. Can I compare both of them? No. For comparing two data, the underlying principle should be same. If the principles are having multiple choices and option, multiple ways. If you're preparing financial statement, then comparability becomes a issue. So to ensure uniformity, this framework is being followed. This framework is being followed. Yes or no? Okay, not okay. For example, you take any financial statement. You take any financial statement. On what basis they do accounting? Cash basis or accrual basis? You take any financial statement, companies, non-companies. I'm talking about in general basis. It is accrual basis. Imagine if this framework is not there. Framework says that follow accrual. Framework says follow accrual. Imagine if framework is not there. Framework is not insisting on accrual. Then what happens? Some will follow cash. Some will follow accrual. Can I compare? My turnover is based on cash basis. Your turnover is based on accrual basis. Can we compare both of our turnover? Not possible because base is not same. Can I compare dollar with INR? No, dollar ka base is different. INR ka base is different. So to ensure that we compare two data, the base has to be same. So who is telling that we want to have a common base? Framework. So framework insists to have a common base. Got it? Not got it? What will this ensure? This will ensure uniformity in presentation and preparation of the financial statement. Any difficulty here? Fourth, it will help auditor. This framework will help auditor. It assists the auditor to form opinion whether the financial statement comply with accounting standards or not. So if your financial statement is prepared on the basis of accounting standard and the required framework, based on that, I as an auditor can give an opinion whether you have followed things properly or not. For example, you have prepared the financial statement on cash basis. So what will I do? I'll give my opinion. I will not come and change you. I will not come and correct you. Though I'll give an advice. Look, boss, as per Indian framework, Indian accounting framework, you are supposed to prepare the financial statement on accrual basis. That is what I can say. I can't force and compel you. But if you come to me for audit, and if your financial statement is on cash basis, I will give an opinion about that in my audit report. I'll have to state that this entity is preparing the financial statement on cash basis. When I give an opinion like that, it might adversely affect your business. Why? Because investors may not like it. Banker will not be willing to lend the money to such institution who are deviating from the framework. So as an auditor, this framework will help me to understand whether the financial statement prepared by the enterprise is within the framework or not. Are you preparing the financial statement within this framework or outside the framework? So if I know the framework, if there is a framework given, based on that, I can do a cross-checking. Yes or no? If I have to give a common example of framework, what common examples can we take? For example, all of you are at what level, people? CA intermediate? Okay. For CA intermediate, is there any framework given by ICI? Any framework is given by ICI? Yes. What is the framework? Sir, inter will comprises of two groups. Group 1 will comprises of these subjects. Group 2 will comprises of these subjects. Like that, can I say they've given a framework? In that framework, they've given choices and options to you. If you want to write both the groups, you write together. If you're not comfortable, write group 1, group 2 separately. If you want to write group 2 first and group 1 later, that also is given. So a framework gives an outline structure within which you can play with the options given. Options are there, but limited options. Why limited options? Can I take from group 1 accounts paper and 2 papers from group 2 and write? And can I say if I cleared 3 paper, group is cleared? Can I say that way? Not possible. So there, the limiting of the options has been done. So like that, wherever you go, there's a framework. When you go to school and study, in school also they had their own framework within which you have to study. Got it? Not got it? Everywhere you go, there's a framework. Because if the framework is not there, if boundary line is not drawn, then people will do what they feel like doing. So whether you're doing right or wrong, there's nothing to cross-check also. So when there's a framework apnina, I can ask an auditor check whether have you prepared the financial statement within the framework or not. If framework is not there, you will prepare the financial statement the way you feel like preparing. How will I know what you've prepared is right or wrong? If I say wrong apnina, client will say, why are you saying wrong? But now on the other hand, if I have framework, I will tell, look boss, framework is suggesting this. This framework has been developed by whom? ICI, in consultation with so many accounting experts, which they feel this is the best way of presenting. So if there is a framework given, I can check the framework and financial statement, whether this financial statement is within this framework or not. If it is there, okay. Not there, apnina, I can give you opinion, I can give you suggestion. But if there is no framework, apnina, can I come and tell you a financial statement is wrong? Not possible. You will ask, what is wrong in this? So everybody will come out with their own different judgment. At the end of the day, everything will become chaotic. So when a framework is there, an auditor, we people can check whether the financial statement that has been prepared is within the framework or not. Got it, not got it? Clear or not clear? Okay. So this framework will help auditor to form opinion whether the financial statement comply with the accounting standards or not. Last, it helps the users of financial statement. It will assess the users of financial statement to understand the financial statement, to interpret the financial statement in best possible manner. In best possible manner. Correct? No? For example, the framework says we have to prepare the financial statement on accrual basis. So if all of you know the meaning of accrual, can you read the financial statement in proper manner? Yes or no? For example, in the financial statement, if they use the word accrued interest, what does accrued interest mean? What is the meaning of accrued interest? Interest earned but not received. Got it, not got it? So if such kind of terminology has been used, and if such kind of accounting is done, looking at that, will you understand or not? Correct, no? So when you have a proper framework in place, and if you understand the framework, you have learned that framework, as a user, as an investor, as a banker, when I read any financial statement, I'll be able to comfortably understand it. But if there is no framework, everybody is doing what they feel like doing. As a user, will I understand any financial reporting? Reliance is doing reporting in one manner, Tata is doing in another manner, somebody is doing some other manner. So will I be able to understand? You'll not be able to understand. Over mari pandringa. How will I develop an understanding? So for me, as an investor, to develop understanding, it's very important that the financial statement should be as per framework. So framework, the company should understand and prepare accordingly. The same framework, as investor, I need to learn and read whether the framework is matching to my learning or not. So that way, this is going to help the users of financial statement. Got it, not got it? So please tell me, people, this framework that we are developing and talking about is helping which all people? What is the first objective of the framework? It assists enterprises in preparing and presenting the financial statement. Ensure that the financial statement that you're preparing is in line with accounting standard. And by chance, if it is deviating from accounting standard, we can use the framework to understand the solution for it. Yes or no? If any topic accounting standard does not provide solution, then we might look the solution for that in the framework. Got it, not got it? Second, it assists ASB for developing the new accounting standard and reviewing the existing accounting standard. Third, it will ensure uniformity. To ensure uniformity, having a framework is very, very important. Fourth, it will help auditor to review the financial statement and check whether they are in line with accounting standards or not. And based on that, I can form an opinion. Fifth, it will help the users of financial statement. It will help the users of financial statement to understand, interpret the financial statement in a better manner. Got it, not got it? Clear or not clear? Yes. No difficulty. Can I proceed forward? Chalo, great. Right. Now, status and scope of framework. Status and scope of framework. Applicability of framework. The framework is applicable to the preparation and presentation of general purpose financial statement. General purpose financial statement is nothing but normal financial statement that we talk about. No, it's not nothing different. Normal financial statement that we prepare is called as general purpose financial statement. This framework, who should apply? This framework, who should apply? It should be applied by all the enterprises. In the framework, who should use it? All the enterprises. Enterprises means what? You take any enterprise, whether they're doing commercial, non-commercial, industrial, non-industrial, business, non-business, private sector, public sector, any sector you take. All the people are referred to as enterprise. These enterprises will use the framework model for preparing and presenting the financial statement. This kind of financial statement is generally prepared on annual basis. For whom are we preparing the financial statement? For the company? No. For the users. For the users of the financial statement, we are preparing the financial statement. Got it, not got it? So the question that came is, this framework, what has been developed by ICI, who should apply it? Who should apply it? Is it applicable on the auditor? No. As an auditor, will you prepare the financial statement of any company? No. You are going to do audit of the financial statement and form an opinion about the financial statement. You will learn about this in detail in the audit subject. The audit subject will understand that we never as an auditor, we never prepare the financial statement. What do we do? The financial statement which is prepared by the enterprises or the entity, they will hand over to us. We will audit it, review it, and form an opinion on it. we will never prepare it. As an auditor, we never prepare it. If you're a CA employee, let's say you're getting placed in the company called as Reliance. So you are a CA employee of Reliance. Then you will prepare the financial statement, but you are not called as auditor. Employee CA is not called an auditor. So I am talking about here auditor. Will auditor prepare the financial statement? No. He forms an opinion on the financial statement. Harini, yes or no? Yes. So this framework, who has to apply? Who has to apply? Should auditor apply? No. The framework is applied by the enterprises. Which kind of enterprises? Whether they are commercial, non-commercial, industrial, non-industrial, business, non-business, private, public, whatever you say, all these people will apply the framework. For what? For preparing and presenting the financial statement. For whom are you preparing the financial statement? For the users of the financial statement. And this is generally prepared annually. Sir, I want to prepare the financial statement half yearly. Can I do it? Framework does not stop. You can do it. Sir, I want to prepare quarterly. Can I prepare? Yes. Ide framework apply even for daily basis also. Nobody is going to stop. But generally, this is recommended for 1 year. At least for 1 year, you prepare the financial statement minimum for 1 year. More than 1 year, if you want to prepare, it's your choice. Got it, not got it. In the company where I was working in 2016-17, we used to prepare the financial statement on monthly basis. Monthly basis. All the adjustment entries then and there every month we used to do it. Right? Now when you come to articleship, and by chance if you get a chance to do audit for listed companies, the financial statement has to be prepared every quarter. They have to get their financial statement audited every quarter. Got it, not got it? Yes or no? Yes. Okay, sir, got it. Who should apply this framework? We got it. It is applicable on the enterprise. Enterprise has to apply it because they are the person responsible to prepare the financial statement. Okay. Now, as a enterprise, you will have a doubt. Sir, there is one framework given by ICAI. Then comes a framework given by certain statutory bodies, such as Income Tax Act has got a different framework, little bit different from the framework suggested by ICAI. ICAI is suggesting something, but Income Tax Act is suggesting something else. Then what to do? Sir, if I'm a company, there's a framework given by Schedule 3 for presenting the financial statement. So should I follow Schedule 3 or should I follow the framework given by ICAI? Now the doubt will come or not? Doubt is coming or not coming? Not coming, I'll go to next point. I have no problem. No problem. Chalo, next point will. Next point is framework versus accounting standard. Chalo. This says that frameworks, I should explain. You have doubt, but nobody is asking any doubt. Open your mouth and say, we have doubt. Okay. Very good. Forget all this. You tell what could be the possible answer for this. Very good. So Lakshita says, do hell with the framework given by ICAI. If Income Tax Act says something, I'll follow Income Tax Act. If Schedule 3 says something, I'll follow Schedule 3, is what Lakshita says. And she is damn right. You're right. Khatam ho gaya, you're right. Yes. The framework suggested by ICAI is a general purpose framework for preparing general purpose financial statement. If nothing is there to guide, I'm there to guide. If nobody is there to guide, I'm there to guide. But if there is somebody who is there to guide apnina, follow their hands and proceed forward. Purida. So if Income Tax says something apnina, follow what Income Tax Act says. If Schedule 3 says something, follow what Schedule 3 says. If you don't get any solution for any accounting, either from Income Tax Act or Schedule 3, then come to me. No help from Income Tax Act, no help from Companies Act, no help from AS. Only yaar me illana na irke. Na yaar framework. Who am I? Framework. Any difficulty? Okay. இருக்கிறவனுக்கு ஒரு வீடு இல்லாதவனுக்கு அப்பா she's like sir என்ன படத்துல டயலாக் எடுத்தீங்கன்னு சொல்லிட்டு. Anyways, the framework does not apply. This framework does not apply to special purpose financial report. Special purpose financial report means what? A financial report which is to be prepared or presented by a specific statute or specific law or specific act. So if a financial reporting has to be done for a special purpose apnina, then this general framework will not be applied there. Got it, not got it. So what special framework says, by that law, follow that. The framework does not apply to special purpose financial reports such as Income Tax Act. So how to do tax computation? You would have studied in Income Tax Act. So there could be. Okay. No, he's revising what I said. So the framework does not apply to special purpose financial reports such as a financial reporting which is required by Income Tax Act for the purpose of tax computation, or a financial report which is required by Companies Act under Schedule 3. Now sometimes the company might ask something called as MIS. What is MIS? Management. Successfully 1/3 cracked. I for ice cream. சொல்லுங்க. Management ice cream system. I stands for internal. Management internal. One thing. Okay, right. Wrong. Anyways. Management information system. Management information system. This is what happens when the ISKA subject is deleted from your life. இதெல்லாம் மறந்துடுவீங்க. Management information system. She's like, what is ISKA? Kuska கேள்விப்பட்டிருக்கோம். ISKA first time தான் கேள்விப்பட்டிருக்கோம். So management information system is basically when I was working, I'll give my live example. So when I was working in the company, in a private company in 2016, I said, no, we prepare accounts every month. That accounts, more or less I prepared as per Schedule 3. But management wanted some extra information, some extra analysis, some extra report. That was not there in framework. So can I tell my boss, get lost fellow, you're deviating from framework. Framework is not asking all this. Why are you telling all this? அப்படின்னு சொல்ல முடியுமா? சொல்லலாம். அடுத்த நொடிக்கு நான் கம்பெனியில் உட்கார முடியாது. கரெக்ட் தானே? So he gave one framework. The company gave one specific framework. Can I override that framework? No. So if any specific framework is given by the organization, you will follow that particular framework. Got it, not got it? Got it, not got it? Clear or not clear? Okay. The framework can still be used while preparing any financial reporting for the purpose of Income Tax Act or for the purpose of Companies Act. Still, this framework can be used. But only when it does not contradict those specific rules. In other words, where the framework principle is conflicting with the legal requirement of the special purpose reporting. Special purpose reporting under what? Income Tax Act Schedule 3. So, எங்களோட framework, நம்மளோட framework வந்து, if it is conflicting with their framework அப்படினா, then which framework will prevail? The specific framework will prevail. Then general framework will take a backseat. The general framework will take a backseat. Got it, not got it? In other words, where the framework means general framework principles, is conflicting with legal requirement of the special purpose reporting, the provision of the law shall override the framework. And the framework will not be applied to that extent. Got it, not got it? Specific rules, what they say, you follow. If they're not saying anything, if there is a lack of guidance there, take guidance from me. Who am I? Framework, general framework. Got it, not got it? Okay. Example, while preparing tax computation, follow income tax rules first. If any issue is not covered in such rules, we may use framework principle, but only if they do not conflict with the tax laws or any other law. Got it, not got it? Any difficulty here? Wherever possible, in the professional language also explain. Wherever possible, in the simple English also I've explained. Now tell me, clear or not clear? Yes. Can I proceed forward? Fantastic. You might get this as a 2-mark question in your exam. I skipped a point? Oh my God. Clever fellow, she got it. அப்பனா அவளுக்கு தான் அக்கறை படிக்கிறதுல மற்றவனுக்கு எவனுக்கு அக்கறை கிடையாது. Point number C. Framework versus accounting standard. Accounting standard is developed based on framework only. But there is versus point here. What is it, Patalama? Okay. The framework shall not override any accounting standard. The framework shall not override accounting standard. In case of any inconsistency between framework and an accounting standard, the provision of the accounting standard will prevail. See, framework is very lenient, very, very lenient. Accounting standard little bit robust. So when the framework was drafted, it was drafted very casually, like that I'll say. Chuma, for saying I'm saying, the framework is drafted very casually. But accounting standard is not drafted casually. There's a whole lot of thought process gone to it before the accounting standard has been issued by ICAI. We have studied the entire process of issuing accounting standard. Yes or no? Lengthy process. Can we recollect the process? What is the process of issuing accounting standard? Fast. First step. Identify the problematic area. Which area accounting rules are not there? I have some problem in accounting. So identify the area where I have problem in accounting. Who will identify this problem? The accounting standard board will identify the problem. What they do? They will hand over this problem to various study groups. Within the AS, we have multiple study groups. Like how you have study groups, for friends, group of friends together, you have a study group. Like that, they also have the study group. So these study groups will analyze the problem and come out with preliminary draft. They'll come out with preliminary draft. In the draft, what they contain? What do they contain in PD? Objective of the accounting standard, scope of AS, what is covered, what is not covered, and they'll try to cover maximum aspects. How many aspects? 4 aspects. Recognition aspect, measurement aspect, presentation aspect, disclosure aspect. Is it necessary that all AS should have all 4 aspects? No. Some AS have 4 aspects, some will have 3 aspects, some will have 2 aspects, and some will have only 1 aspect. Okay. So considering all of this, this study group will draft PD. Then this PD is handed over to council members of ICI and regulators, industry bodies, other people for the purpose of their review and feedback. Once they give review and feedback and we make a note of it. So with PD, if I make any changes, that becomes exposure draft. Wonderful. Then this exposure draft is released to public for public feedback, public comments. In public, who will come? You, I, practicing CS, all of them come in public. So they will share their experiences telling that this is okay or not okay. Once you incorporate the public comments in the exposure draft, then ICA will finally issue the accounting standard, which will be made applicable on the non-corporates directly. But if you're a corporate, then this document is handed over to MCA for their notification. Will MCA notify just like that? No. They will consult with NFRA if this point is okay or not okay. If NFRA is giving any recommendation, ICA has to make the necessary changes. And once the changes are done, then MCA will finally notify, and that AS is applicable on corporates. To issue this AS or notify the AS, such a lengthy process, such a lengthy consultation we have. So imagine the amount of thought process that has been put into developing accounting standard. Is the framework developed that way? No. So framework is developed very leniently. So there are chances that framework and accounting standard may contradict. By chance, if it is contradictory, who will win here? Accounting standard will win. If framework and accounting standard is contradicting, you will follow accounting standard, not framework. Got it, not got it? Okay. If this is clear, can I go to the next point? Components of financial statement. Components of financial statement. Online people, are you all with me? Open your mouth and respond, all of you. Fast. Yes, so many people have switched off the video also. Oh. Laksh, Hari Prasad, Shrivant, Jalsa only. Abhinay, Inia, others are okay, fine. I can see all of you. Chalo. In exam, if they ask you, what are the components of financial statement? What will you say? Sir, 4 components are there. So how many components? 4 components are there. First is balance sheet. Second is statement of profit and loss. Statement of profit and loss. Third is cash flow statement. Fourth is notes and other explanatory statements. All these 4 put together comprises of components of the financial statement. Got it, not got it? In law, you've come across something else. Statement of changes in equity. I knew you will have this doubt. That is statement of change in equity. What is that name? Statement of changes in equity is a component of financial statement. That is also a component of financial statement only if you are following Ind AS. In entire intermediate, we have only AS. So at the intermediate level, if I ask you the component of financial statement, will you give me from AS point of view or Ind AS point of view? AS point of view. But in final, we have the same question. What are the components of financial statement under Ind AS? In that, apart from these 4, what will come? One more will come, which is statement of changes in equity. Got it, not got it? But that should not be applied here because we are learning only accounting standard. But I knew this contradictory will come in the law point. So I made a clarification here. Clear or not clear? Super. Sir, in notes, other reports, explanatory statement, what will all comprise of? In the notes, we'll be learning in accounting standard 1, how the disclosure of the policies needs to be given. So disclosure of various accounting policies will come. Segment reporting done by AS. Yes, September people. Segment reporting. Which standard? AS. 17. Related party disclosure under AS 18. So like that, you have a lot of additional reports to be prepared. So all this will be a part of your financial statement as components. Okay, not okay. Super. Now comes the next question. So this financial statement that we are preparing, no? For whom are we preparing so much of financial statement? So much of efforts we are putting into it. For whom? We are preparing this financial statement for the various users of the financial statement. We are preparing the financial statement for the various users of the financial statement. There is somebody who's going to read the financial statement, understand the financial statement, and accordingly they're going to make some decisions. So for those people, to enable them to take a proper decision, this financial statement needs to be properly prepared and presented. Got it? Not got it? Okay. These users are bifurcated into two categories. One is called as internal user. Second is called as external user. Who is internal user? Existing investor or owner. Owner or existing investor is called as internal user. Who are they? From the company's point of view, they are equity shareholder or preference shareholder. From the partnership business point of view, who are the owners? Partners are the owners. For LP, who are the owners? Partners are the owners. Got it? Not got it? Okay. Why are they interested in the financial statement? Why are they wanting financial statement? Very good. So as the owner of the business, I want to know whether my business is into profit or loss. So for that, we review a financial performance document called as statement of P&L or trading and profit and loss account. Yes or no? If I want to know the profit and loss of the business, for that we have to prepare the financial statement. The financial statement component is what? One of the component is what? Statement of P&L. So when I prepare statement of P&L, in this I get to know what is the profit and loss of the business. If I don't want to know profit and loss of the business, I need to see the financial statement. Where in financial statement? Statement of P&L. Statement of P&L. Okay, not okay. The same statement of P&L, a non-corporate will be drafting in form of trading and profit and loss account. Possible, not possible? Possible. Possible, not possible? Possible. Okay, next. Why do we need financial statement from owner's point of view? To ascertain the return on investment. The investor has invested the capital in the business. Why? Because he wants to know what is the earning that he has done against the investment. Return on investment. Let's say the return on investment is 10%. What is 10%? 10 by 100. What does it mean? As an investor, for every 100 rupee I invested, I've earned 10 rupee. So like that, what is the earning that I've done by investing in the company every year? I want to know whether my returns are positive or negative. I want to know that. Okay, not okay. So for that reason, I will check the financial statement. Third, to assess the ability of the enterprise to pay dividend. What is this point trying to say? Capability to pay dividend. Okay. Ability na capability மாத்திட்டீங்க. அவ்வளவுதான். Super, super. Do they have enough profits to pay? அதான profits இங்க பார்த்தாச்சுல்ல. Now, some company, what's happening? Some companies, they're doing excellent business. Every year, they've reported excellent profit. Every year, profit is increasing. But that company has not declared dividend. If company is not declaring dividend, what will I get as investor, boss? So if I see a company whose profit growth super, return on investment of the investors super, but nothing is coming to my hand because they're not declaring dividend. Some companies for last 10 years, they have not declared dividend. So should I invest in such company? No, then what will I get in return? Nothing I'll get. So therefore, I need to check whether the enterprise is having ability to pay dividend or not. Are they paying out dividends regularly or not? Yes or no? Got it, not got it. You may be in profit. If you're not paying dividend as an investor, what am I getting? Nothing. So as a owner or existing investor, I am requiring financial statement to ascertain all this point. இது தாண்டி நிறைய விஷயங்கள் இருக்கு. I've taken for sample 3 points. As an owner, as investor, I'll be interested in the financial statement for multiple reasons. I've just picked up 3 reasons for you. General purpose reason. Got it, not got it? Okay. Next, employee. Sir, employee is also interested in the financial statement? 100% yes. Yes, boss. What is the query? Now the question is, she's asking, will management come under internal user or not? I'm not going into that because at the intermediate level, they will not ask you whether they are internal or external users. Now, if you refer different books, some book will tell you only owners are the internal users. Some textbooks will tell you owner plus management is internal user. I'm not debating that because there's no question going to come based on that. To be very honest, this concept is there in your ICA module. They've directly given users, but yaar internal, yaar external, nothing has been given. This I gave out of the past experience which I've gathered from foundation textbook. Got it, not got it. So we are not literally bothered who's internal, who's external. What we are bothered is who are those 7 users. So second user ka name is employee. So why is an employee interested in seeing the financial statement of the company? Job security. Very good. How does he ensure the job security? By doing proper job, sir. நல்ல ஜாப் பண்ண செக்யூரிட்டி இருக்கும், இல்லைன்னா இருக்காது. Correct. So now this problem will happen mostly with the top management employee. Top management employee who are there in the company, for a good pay, they're getting good package. They always have a fear. What if this company closes in future? And similar kind of job or pay if I don't get in future? This mainly happens where, startup companies. Startup companies in Bangalore or let's say in Bombay, they pay very good money, at the initial stage. They'll pay 15 lakh rupees per annum, 20 lakh rupees per annum, 25 lakh. It's because it's not their own money, no. They've got funding from the investors. Amount காசு இல்லைல்ல, அள்ளி கொடுப்பாங்க. Now problem is, such employee, அவனுக்கு தெரியும் இதுக்கெல்லாம் நான் லாய்க்கே இல்லையே, 25 கொடுக்குறேன் பரவாயில்லையே அப்படின்னு சொல்லிட்டு வாங்கிடுவான். 1 year, 2 year, the company will run. 3rd year, company will become swaha. The 25 lakh package also swaha. Because next company, when you go, he'll offer 12 lakh package only. Now, the person who's already enjoyed 25 lakh per annum for 2 years, his confidence is shattered, man. 25 to 12 lakhs. The actual worth is 12 lakh only. But startup gave double money for some reason. Let's not get into all reasons and all. Correct? Kududachu. So now as an employee, I'm concerned, 2 years you paid, 3rd year, do you have the money or not to pay? What if this company itself will bring from 25 to 12 lakh? If I will I can make my arrangements, no? I'll start hunting for new companies. Maybe if India is not suitable place for me, I'll go abroad also. So at least 12 lakh package, if it is converted in dollars, at least I can be satisfied with 30-40 lakh I'm getting. அது வேற விஷயம், அங்கே earn பண்ணி அங்கே செலவு பண்ணி மிச்சம் மீதி ஒண்ணு இருக்காது கையில. So as an employee, they are concerned whether the company is doing genuinely well or not. Because if company is doing well, if the company is on the growth path, there are high chances that as an employee, if I do my work properly, my growth also is assured. So to track the growth of the company impacting their earning, if company is doing well, if companies got good profits அப்படின்னா, they'll have sufficient money to pay the salaries. There's so many places where we have learned the company is not paid the salaries for so many months. COVID period happened. Kingfisher Airlines also. When all this drama happened for Kingfisher Airlines, there's so many pilots, crew members of the, what do you call it? Airline crew members, they were not paid salaries for several months. In the podcast that was released last year by Vijay Mallya, in that also he specifically mentioned. Yes or no? So as an employee, I'm concerned, boss, whether my salary will come on time or not. When I look at the financial statement is full of loss. Not for 1 year, for multiple years. Cash flows are in negative. Company struggling to arrange the finances. Then that is an alarm to the employee that pack your bags and silently move away. That is a silent warning. So that silent warning, from where do I get? From the financial statement. From where? 2 documents. P&L and cash flow statement. P&L and cash flow statement. P&L will reflect the losses of the organization, performance of the organization. And cash flow statement will see whether they have sufficient money or not. Cash flow is positive or negative. In the end document, we can get a lot of data. Not just that. Looking at the balance sheet, they'll get some data. Looking at the balance sheet, they'll derive some data. What data? Whether the statutory dues related to employees are paid or not. Can you name a couple of statutory dues? Okay, PF, then ESI, very good. Gratuity. Gratuity do you pay every month? That's not a statutory due. I mean, it's there, but not literally. TDS, TDS. So I'll take two concepts. One is PF, one is TDS. What is PF? Provident Fund. Now, imagine your salary. I'm taking data only for discussion purpose. Don't take it literally, okay? Imagine there's an employee whose salary is 50,000. Salary is 50,000. Will he get this 50,000 in hand? No. A lot of deductions will come, which you study in income tax, right? I'm not going too much in depth. I'm just telling you this. Out of this, 5,000 company will hold in form of PF, and company will hold 5,000 in form of TDS and give balance 40,000 to the employee. Balance 40,000 to employee. This 5,000 is deducted for PF and this is for TDS. Got it? Not got it? Okay. So what is PF? In the olden period, employees never used to do the savings. Whatever money they got, no, they used to spend it. So whenever they had any emergencies at home, whether medical emergency or any kind of emergencies, they used to always run short of money because they never knew how to be financially prudent. A person who's financially prudent will understand the importance of saving and investing. Saving and investing. But these people had no idea about saving. Forget investing. They had no idea about saving itself. So whatever money they earned, everything they spent. So when there is emergency, they don't have any money. So that time they'll go and borrow loan. And imagine what happens when a person continuously for everything they borrow loan. What will happen? A point will come where their income will be less. Debt, interest will be more. But point of time when they're not able to pay interest, when they're not able to handle themselves, they will commit suicide. Correct? No? So they're stuck in a vicious circle. Now, to encourage saving, what they did is, they said, we'll come out to this concept of provident fund, where we will encourage certain set of people to compulsory do the saving. So government said that, look boss, if you give this 50,000 to this gentleman, he'll spend his entire money, just like this, ding, 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 ding. So என்ன பண்ண அப்படின்னா இந்த 5,000 நீ பிடிச்சிரு வச்சிருக்கோம். You give it to me. Give it to me யாரு? Company should hand over this to the government of India. Government of India will save the money on behalf of employee. So imagine this employee is getting PF deducted every month. For 12 months, how much it is? 60,000. For 10 years, how much? 6 lakh. So if government is saving the money for you for 10 years, aptina, how much money is being saved till the end of the period? 6 lakhs. And government is having this money. Government is very smart. Government will use the money for development of the country. And for that, they have big heart. They'll pay interest for you. And interest, what they pay is very good interest. Sometimes the interest is more than the bank interest. Bank FD interest. Win-win, no? So government also getting money, funding. And for using that funding, they're giving good amount of interest also. So as an employee, my funds are getting saved also. On that, I'm getting investment ka return also. Got it, not got it. So that money is kind of investment now. On that, I'm getting return on investment. Got it, not got it. Got it, not got it. Okay. And remaining 5,000 is tax that you pay to the government. Got it, not got it. In the income tax topic, you'll study about TDS in depth. But those who have done foundation with me, TDS ka glimpse I gave in the CA foundation. Those who have not studied, no problem. You will see in the income tax subject. So please tell me, for this 50,000, what is the journal entry? Salary account debit. 50,000. For company, full 50 is expense only, no boss. Whether he's paying 40 to employee, 5 to government, 5 to income tax department, company கையிலிருந்து 50,000 full போதா இல்லையா? So company பொறுத்த வரைக்கும் இது வந்து செலவு தானே. So company is expenditure, no? Yes. Salary account debit. And then how much is given to the employee? 40,000. To bank, 40,000. Two, have you paid this money to government? No. You are given a stipulated due date within which you have to deposit this money. Until then, it is a liability. So we call a liability account called as PF payable. Next is to TDS payable. Like that, 5,000 goes on the liability side. If this is not paid up tina, if the company is genuinely not paying this money up tina, in the balance sheet, TDS payable 5,000 will reflect. PF payable 5,000 will reflect. Imagine this money is not paid for 1 year appadina, how much money will be reflecting? 60,000 is reflecting. Only when you look at the financial statement, you will understand that this is a liability which the company has not paid. And looking at this, you can ask question, why the hell did you not pay my statutory dues? Only looking at the financial statement, I as an employee get an idea whether the statutory dues, what you said, will be deducted and given to the respective government. You've given or not given, balance sheet paathadan theriyum. So to know this, as an employee, I'm interested in the company's financial statement. I'm interested in company's financial statement. Got it, not got it? Tell me. Okay. If this masala is not good, I can do the entire class without masala also. Because for me to do masala oriented classes, I need lot of support from all of you, lot of energy from all of you. I understand this is a little theory topic. Little, she's like, oh my God. You want practical questions? You bear with me for half an hour. In the next half an hour, I'll start practical questions. Okay? Please concentrate. Please concentrate and respond. The more you respond, the more you'll be able to listen to the class well. Got it? Okay. Lenders ने यार पैसा देने वाला she's telling. Very good. दुड्डू कुड़गराम. Now bankers, debenture holders, and so many other people want to see the financial statement and see how the company is doing. Whether this company and the company லாயக்கு இருக்கா நமக்கு ஃபண்ட் கொடுக்குறோமா கொடுக்கூடாதா. To decide that whether to give loan or not, for me it is very important to read and understand the financial statement. Whether to provide the loan or not, this decision I can take looking at the financial statement. How, sir? Okay. If you have seen Schedule 3, in Schedule 3, other current liabilities, we have something called as interest due but not paid. Interest is due but not paid. Yes or no? One is interest due and paid. One is interest not due, not paid. Interest not due, not paid. One is interest due but not paid. Interest due means what? You have promised to pay the interest on a particular date. It's due for payment. You promised to pay, but you have not fulfilled your promise. So that kind of interest liability, where will you show under? Interest due but not paid. So if I see any amount under interest due or not paid, that is my alarm. It's a red color warning. Look at this donkey fellow. To the previous lender, he said, on this date, I'll pay the interest. That date also gone. He's not paid the interest. That information from where did I get? Financial statement. So as a lender, looking at certain data of the financial statement, I can figure out, should I lend the money or not? If at all I have to give the money, means how much money can I give? How much risk I can take? Giving loan itself is a risky business. Finance is itself a risky business. So I will be able to evaluate how much risk should I take or not, depending on the financial state. Whether the business has got the capacity to repay the loan or not. If there are any debentures loan which is matured for repayment but is not paid up, that means the company is into danger. Company is not handling the cash flows properly. So as a lender, I'm interested in your financial statement for all these reasons. Got it? Not got it? Why is creditor interested in our financial statement? He is supplying the goods to you on credit. So he wants to know whether this company, as promised, will pay the money on the due date or not. Got it? Not got it? Now, pakka information you will get where, in Schedule 3. In Schedule 3, when you're preparing the creditors notes to accounts, what are you supposed to present? You're supposed to present the aging report. Company விட்டுருங்க. Non-company பார்த்தீங்கன்னா creditors வரும். Creditors means what? I have to pay this money to the supplier. But this money is pending for how many years? The normal financial statement for the non-corporates does not tell. But in Schedule 3, they were very smart. They said, chumma creditor lang kaamcha pattadu. This creditor is not paid. That is, it is due for payment. You promised to pay, but you did not pay for how many months? Like that, you give a report called as aging report. So imagine, already there is a, what do you call it? Last month is what? 14th of March. Today 14th of April, correct? Today is 14th of April. Last month, 14th of March, I'm supposed to make a payment of 1 lakh to a creditor. Last month was the due date. Now, today is what? 14th April. How many days has gone by? 30 days. Beyond the due date, how many days has gone? 30 days. So in the aging report, 0 to 30 days or 1 to 30 days till this 1 lakh will be presented. So when I, as a creditor, look into financial statement, there's a creditor A to whom the company is supposed to pay 1 lakh rupees. For 30 days, they have not paid. There's one more creditor B to whom the company has to pay 5 lakh. For 90 days, the company has not paid. 90 days before they promised to pay, but still they have not paid. Like that, information is given. Based on this, I can understand or decide whether should I lend the goods on credit to this company or not. If there are too many amounts coming under this aging, appadina, it's a threat to my money also. Means what has happened to these creditors, there are high chances that it might happen with me also. So based on the financial statement and specifically aging report, I can decide whether should I lend the goods on credit to the company or not. Got it, not got it. Whether to supply, creditor is interested in your financial statement to decide whether to supply goods or service on credit or not. To assess the pending dues and aging of the other creditors. To assess the paying ability of the business. So how do I assess their paying ability? Look at the cash flow statement. If their operating activity ka cash flow is negative, at the operational level itself, money is not there. Then from where will you get the money to pay? So looking at the cash flow statement, one's ability to pay or not pay can be decided. So like that, creditors are interested in my financial statement. Next comes government authorities. Why are government authorities interested in your financial statements? Income tax department, GST department, ROC. Why are they interested in your financial statement? Boss, to check whether you have paid the appropriate taxes and statutory dues on time or not. If you have not paid, it is very convenient for them to send notices. In most of your articleship period, if you're lucky enough, you will be able to handle notices which has been gained by your so-called clients. Your client will get notice from income tax department. Who will respond? Client, you only will respond. So in articleship, they teach you how to respond for notices. Got it, not got it. Very nice segment. Litigation is very nice segment, but you have to be very lucky to be in part of litigation segment, because not all auditor office will allow you for litigation in initial 2 years itself. Because you're Amul baby, no. As Amul baby, how will you know how to handle litigations? So in most of the cases, litigation is handled by a qualified CA employee. But if you're lucky enough, maybe you'll get it. So government is interested in a financial statement to check whether the appropriate tax and statutory dues are paid or not paid. Okay. Public and potential investors. Public here means potential investors. Means what? I'm as an individual person want to invest in the shares of Reliance Industries Limited. So whether that company is doing well or not, in future will I be able to benefit or not? In future will I get dividend or not? Will the appreciation of the share in the share market will happen or not? All that assessment I'll get from financial statement. So financial statement, with that I'll do some analysis. I'll be able to understand whether this company is good to be invested or not. So in that way, I'm interested. Who am I? Potential investor. Potential investor na yaar. I'm going to invest the money now only. So after I study the financial statement, after I study the company, whether good or bad, then I will invest. So who am I? Potential investor. Potential investor. Got it, not got it. To assess whether to invest in the business or not, to invest in that company or not. For that, I'll depend on financial statement. It's very true. See, these days, a lot of IPOs are coming. All of you know what is IPO? Full form, initial public offering. So this is where the company is raising the funds for the very first time from the general public. So tell me one thing, if you're a prudent investor who understands accounts finances properly, will you blindly invest money in any IPO, or will you go and check their financial statements? You check the financial statement, not for 1 year, for several years, to see the track records. Only then you'll decide whether should I invest in that company or. So that way, as a potential investor, I'm interested in the financial statement of the company. Who am I? One of the users of the financial statement. Who am I? One of the users of financial statement. Any problem? No problem. Last is customer. Customer ke company ennaya venum. Why are they interested in financial statement? Now, my simple question. D-Mart is there? Irk. Lulu Mall is there? Irk. Lulu Mall, irk. Brookfields Lifestyle, Pantaloons, West Side. Okay. List update portal. Nilgiris departmental store is there. Have you ever in life, while stepping up the shop, did you say, give your financial statement? I will see how your financial statements are. Then I'll buy from your shop. Did you ever say? No. Then why the hell did they put customer here? When they say customer here, don't take retail customers like you and I literally. Which customer is bothered here, Wholesalers and big retailers where they deal with the company on continuous basis. Imagine, who am I? Wholesale, a person who deals with wholesale paint and wholesale business. I'm doing wholesale business of paint. Only one brand, Asian Paint. Which brand? Only Asian Paint. So if you want Asian Paint appadina, come to my shop. If that company is not doing well, அவன் நம்பி தான் கடை இருக்கு, அவன் நம்பி ஒரே ஒரு பிராண்ட், அவன் நாளைக்கு ஓடிட்டான்னா நான் எங்க ஓடுறது? அவன் பின்னாடிங்க. Tell me. So in such scenario, I should be able to understand whether this company is doing well or not today. Whether in future they will do well or not also I should know. That data comes from where? Financial statement, and by analyzing the financial statement. Financial statement and analysis of the financial statement, with this I'll get to know the current position of the company and its future prospect. To some extent we can predict. Correct? No. Our future is predicted by how? By our horoscope. In reality or not, I don't know. But that's how they tell, no? You go to any, what do you call? Astrologer, Jyotishi. What they ask? காசு வாங்குவாங்க, ரெண்டாவது தான். ஃபர்ஸ்ட் என்ன வாங்குவாங்க? பைசா செகண்ட்மா. ஃபர்ஸ்ட் they'll ask your horoscope, ஜாதகம் தமிழ்ல சொல்லுவோம். கரெக்டா? Based on that, what they predict? Your future only, no? Analysis is done, and that's true. Don't laugh at it, huh? It's true. என்னம்மா நம்ப மாட்டேன்ற நீ? It's true, I'm telling. I believe. Numero, tarot, parrot எல்லாம் இருக்கு. We are not getting into all that. No, we are not getting into all that. Lex? No, we are not getting all that. Okay, wow. So, if I want to know the future of the company, I will read financial statement. I'll analyze the financial statement. Who am I? Customer. Which type of customer? That customer who's dealing with the company on long-term basis. I'm wholesale painter in my city who's dealing with Asian Paint for last 5 years. So I'm in long-term association with such company. So whether the company is doing well or not, I'm interested, boss. So to assess whether they are dealing with a financially healthy enterprise or not, and especially when such dealing is for long-term nature, in that case, I'm interested in the financial statement. Who am I? One of the user of financial statement. Like that, in total, how many users of financial statement are there? 6. Say 6. No? 7? Say 7 properly, all of you then. 7. Very good. Now, what is my next question? Who are those 7 users of financial statement? First user is owner or existing investor. Second, employee. Third, creditor. Okay. Fourth, lender. Then government. Then potential investor or public. Then customers. Any difficulty? No problem. Super. So far, what have we discussed? First, we spoke about the meaning of framework. What is framework? என்ன அப்படி திருத்தல் முடிச்சிட்டு இருக்கீங்க? Assumptions. What is framework? Assumptions. What is assumption? Framework. Seri, I know all of you Gajni people. Now at least read and tell me. Concepts, assumptions, principles for preparing and presenting. Very good. Framework will give you certain basic concepts, accounting principles, accounting assumptions, based on which you're supposed to prepare the financial statement. Prepare and present the financial statement. Very good. Purpose of the framework. It will help which all people? It will help enterprise to prepare and present the financial statement. If there is any part in accounting standard which does not give the clarity, upon a framework refer பண்ணி என்ன பண்ணுவீங்க? You get a understanding from the framework. Very good. Second, helps ASB. ASB, while formulating the new accounting standard and revising the existing accounting standard, they will take the help of framework. Then promote harmonization, uniformity. Then helps auditor. If the financial statement is prepared as per the framework, to form an opinion on that, it becomes very easy for me. Then help the users of financial statement to understand and interpret the financial statement in a proper manner. Any difficulty? No problem. Who applies this framework? Auditor will apply, sir. Auditor will apply. எனக்கு வேற வேலை இல்ல. We are studying, no, so we only should apply. We are studying, but who should apply? Enterprise. எவன் அப்ளை பண்ணனா அவன் படிக்க மாட்டேன்றான். யார் அப்ளை பண்ண கூட அவன் படிச்சிட்டு இருக்கான். வண்டர்ஃபுல். ஒப்பீனியன் நீ கொடுக்குறான், ஃபர்ஸ்ட் ஃபாலோ பண்ணலம்மா. அப்ப சிஏ யார் படிக்கணும்? ஆடிட்டரும் படிக்கணும். Practice பண்றவனும் படிக்கணும், business போறவனும் படிக்கணும். That's why in 11th I'm screaming and telling. After finishing 12th, if you're planning to do business அப்படின்னா, do CA. Even if you want to do business, do CA. Because you have to learn how to prepare the financial statement using the framework. Nobody is taking me seriously. What do I do? Donkey fellows. So who should prepare? Sorry, who should apply this framework? Enterprises. Which enterprises? Whether you're doing commercial, non-commercial, industrial, non-industrial, business, private, public, what kind of organization you have, all of you have to follow framework for presenting the financial statement. And this financial statement is prepared for the users of financial statement. This is prepared generally for annual basis. Generally, we prepare annually financial statement. If there is a framework which is contradicting with the special framework, which is given by Income Tax Act or Companies Act or any other person, which will prevail? Special framework, the financial reporting which is to be done as per the special framework, that will prevail. If there is any contradiction between framework and accounting standard, which will prevail? Accounting standard will prevail. Okay. How many components of the financial statement? How many components of the financial statement? This fourth area. How many components of the financial statement? Online people. How much can you see this? See, people are telling 3. 3 or 4 are? 4 are there. Donkey fellow telling 3. First is balance sheet. Second is statement of profit and loss. Cash flow statement. Last one is notes and explanatory statements. Anne, ரொம்ப கஷ்டப்பட்டு I'm trying my level best to ensure that this dry subject is made very lively. கஷ்டப்பட்டு மொக்க ஜோக்ஸ் எல்லாம் போட்டுட்டு இருக்கேன். ஊரே சிரிச்சிட்டு இருக்கு. அண்ணா அங்க கார்னர்ல உட்கார்ந்து அப்படி சிரிச்சிட்டு உருன்னு பார்த்துட்டு இருக்காரு. பயமா இருக்கு எனக்கு. I am feeling an inferiority complex. ஓ, நம்ம லெவல்ல ஜோக்ஸ் ஆவல அந்த அளவுக்கு போலியோ. எனக்கு ஒரு inferiority complex. நான் மொக்க போட்டா கூட சிரிச்சிட்டிங்க வச்சுக்கோங்களேன், ஒரு ஜாலியா இருக்கும். பரவாயில்ல, நான் பெரிய ஜோக் கிராக் பண்ணி சொல்லி எனக்கே ரொம்ப பெருமையா இருக்கும். சிரிப்பு வரலனாலும் சிரிச்சிடணும். புரியுதா? இனிமேல் வெரி குட். சச் a nice smile is God. இந்த பக்கம் வந்து சிரிஞ்சீங்கன்னா அப்படியே 2 பேர் மயங்கி விட விழுந்துருவாங்க. தெரியாது. ட்ரை பண்ணலாமா? வேண்டாம். சரி, அங்கேருந்தே பண்ணுங்க. நான் மயங்கி விழுகிற மட்டும் போறோம். தமிழ் में बोल. Others understood. No, that's okay. Now, next, what are the elements of financial statement? What are the elements of financial statement? There are 5 elements of financial statement. First is asset. Second is liability. Third is equity. Sir, இது பார்த்தா CA inter class மாதிரி தெரியுது. From beginning of the class, I'm observing 11th class standard topic, 12th standard topic, you're sitting and taking. இந்த கேள்வி கேட்டீங்களா? யார்கிட்ட கேட்கணும்? எங்கிட்ட கேட்கணுமா? இந்த ஃப்ரேம்வொர்க் நான் டெவலப் பண்ணனா? யார் டெவலப் பண்ணா? அங்கதான் கேள்வி கேட்கணும். எங்கிட்ட ஒன்றும் கேட்கக்கூடாது. I am here to teach what is there. But I promise you, today's session, you learn a lot of new points which you haven't learned in 11th, 12th and foundation also. It's my promise. But definitely this is a topic coming from your 11th, 12th only. Foundation only. Purida. Only one topic is new. Rest all everything is, no, 2 topics are new. Rest all is old. I'll prove it in some time. Sometime. Elements of financial statement. Asset, liability, equity, income, expense. Equity is nothing but your capital. Equity is nothing but capital. Local language, we say capital, but we don't use local language. No, we use international language. So that is called as equity. Any problem? No problem. These 3 elements of financial, not components. I said elements. Components na enadhu? Components na enadhu? Balance sheet, statement of P&L, cash flow and notes to accounts. I asked element. How many element? 5 element. Asset, liability, equity is based on which? These are the elements of balance sheet. Income and expenses element of P&L. Any problem? No problem. Now, can somebody tell me what is asset? I know what you'll tell, but still I want to hear. I knew it. So Purvi says anything that I own in the business or which I expect to receive in future is asset. Who gave this asset ka meaning? I gave. I scammed all of you. To make your life easy, I said this and believed also. And based on that, 11th also you finished, 12th also you finished, foundation also you finished. Now sitting in inter. Only to learn what is the true meaning of asset. So let's dig. What is the true meaning of asset? How to mind getting avul andalav dead செம்மையா இருக்கு மீனிங். Meaning of asset. If you have any seat belt, please put it on. First, an asset is a resource. Oh my God. Asset is a resource controlled by the enterprise as a result of past event from which future economic benefit are expected to flow to the enterprise. So, Same, Apurvi says, same thing I said in easy language. That is what I've been teaching since 11th also. To a 11th standard student, if I go and tell him resource, controlled by enterprise, having future economic benefit, ரெண்டாவது கிளாஸ் கிட்ட வரமாட்டான். புரியுதா? So I said, what is the meaning of asset? In a way which a person can understand. Normal English. But this is not normal English, no? Because it's accounts class. Oh. Now, can somebody explain this? Sir, அதுக்கு தானே ஃபீஸ் உங்களுக்கு கொடுத்துருக்கோம். ஹரிணி, any idea? No idea? Now, explanation. What is the meaning of resource? Sir, resource na enna? A resource is any valuable or useful either item or right. A valuable item or valuable right. Useful item or useful right. Whether tangible or intangible. Purvi, whether tangible or intangible, that is available to the enterprise and can be utilized to generate economic benefit. So now also we understand. I know. You will give this reaction, I know. That's why I gave so many examples below. எல்லாம் prepare பண்ணி வந்திருக்கேன் நான். Now, we'll come back to this little later. Something I put into your head, but lot of things I meant to put. Sir, what is meaning of control? If you observe, nowhere in the language of the asset, they have said, an asset is something what I own. The language owned is not used. What have they used the word? Controlled is what they have used. Upon if I have an asset, laptop, this laptop, asset. I was searching for asset, mobile phone, not there. Laptop, asset. Laptop, asset. It's not in my name. It is in Anita ma'am's name. Anita ma'am's personal name. But this laptop, life is 5 years. All 5 years I'm using, but I'm not the owner. Up in the laptop asset, who should classify? Me or Anita ma'am? One second. System is itself is telling, give me a break. but நம்ம விட்டுருவோம் என்ன? நீ என்ன வேணா சொல்லு, நான் எப்போ கொடுக்கணும் அப்போ தான் கொடுப்பேன். ஷார்ப் 8 o'clock leave break until Thursday. Now, this laptop, Anita ma'am is purchased, Anita ma'am is owning. But all 5 years of the laptop, laptop life 5 வருஷம், full 5 years I'm using. I will do whatever I want to do with that laptop. I mean, using means for that purpose only I'm using. Tell me, who should record asset? Prathik sir or Anita ma'am? Kalpavriksh Academy or Anita ma'am? Tell. In form, in principle, who's the owner? Anita ma'am. But in reality, in substance, who's the owner? Prathik sir. So there's something called as substance over form. Substance over form. In form, in document, who's the owner? Anita ma'am. But in reality, who's operating it? Prathik sir. So there's a concept called as substance over form, which already September people have come across in few topics. You Jan people come across in few more topics. So I'll discuss today also, now also, in future also I'll discuss. Okay, not okay. So as per the accounting concept, it says that in reality, the person who's having the control over the asset, he should record the asset in the books of accounts. See, in our example, that laptop is under whose control? On day-to-day basis, who's controlling that asset? The laptop is dancing on whose? इशारा को क्या बोलते हैं इंग्लिश में? अरे हिंदी में नहीं रे, इंग्लिश में. Dancing. Understood no? Dancing. This laptop is dancing on my tip. Correct no? Who's controlling the asset? So who should record asset? But I'm not the owner. Hence they've not used the word. Hence they've not used the word owner in the definition of asset. So for defining asset, ownership is not required. What is required? Control is required. Control is required. Hey, my dialogue over. Now if you tell the word searching from dictionary means what is the use? Now time over. The tunes எல்லாம் முடிஞ்சது my panic. So control means ability of the enterprise. Control means ability of the enterprise to use the resource for its operation. Control means ability of the enterprise to use the resource. Resource means what? Asset for its business operation, obtaining benefit arising out of it. So from using that asset in the business operations, I should get benefit out of it. Such control can exist without legal ownership. So that asset, I have a control. Even without legal ownership, I'll be called as owner of the asset. Though I don't have the ownership in records, but since I'm having the control, I'll call such asset as asset in my books of accounts. Such control can exist without legal ownership of the resource. Okay, not okay. That okay is not coming with confidence. No, it's correct only. That okay will come with confidence after I give you 5 examples. Namma. See, meaning of future benefit. This asset, or let's say this laptop, I will classify this as asset only if this asset is helping me to get some future economic benefit. So what is the meaning of future economic benefit? It means that asset is expected to generate cash inflow or provide economic benefit to the enterprise in future period. In the laptop illa appadina class nadukuma nadakadu. Class nadakala appadina paisa varuma varadu. So paisa means what? Economic benefit. Economic benefit is called as paisa. Economic benefit need not be only in cash, it can be in kind also. Any kind of benefit which the company is deriving in future by using that asset, that is called as future economic benefit. Got it? Not got it? This got it is little better, but after 5 example, it will become super better. Now, example, inventory, stock, asset or not asset, can we check? Okay. A company purchase goods for resale. Anything that I buy for the purpose of resale is called as stock inventory. Yes or no? Vikkada varikku adu inventory thana. If I don't sell that product until then it's my inventory. Okay. So what is this resource? Sir, it's a goods. Come back to meaning of resource. What is a resource? A resource is any valuable or useful item. Valuable or useful item. Valuable or useful. Either item or a right. Which could be either tangible or intangible. Which I will use to generate economic benefit. To generate economic benefit, something should be there, no? To generate money from this class, I'm using laptop. Appo laptop venu len kaila. So that laptop is called as resource. Phone is called as a resource. Projector is my resource. This resource can be in any form. It could be tangible or it could be intangible. It can be an item or it can be a right also. Yes or no? For all of this, I have different examples. Don't panic. One by one we'll go. So first of all, in the inventory one, they know resource idea. It's a resource in form of goods. Something which you can touch, tangible. Got it, not got it? Okay. This inventory is controlled by me. Pratik sir is controlling it. Because I can sell to whomever I want to sell. Appa control irukilla. In the பொருளை யாருக்கு தேவையான விக்கலாம் அப்படின்னா control யார்கிட்ட இருக்கு? என்கிட்ட இருக்கு. So I have a control over it. Yes or no? Yes. How did this control come to you? With a past event. What is that past event? I purchased it. After the purchase event only, I got the control. Before purchasing this product, this inventory was somebody else's control. So after purchase only, it came to my control. So what happened in between? One event happened in between. That event should have taken place. That is what is called as past event. Past event. And this will give me future benefit. How well will I get the benefit? Either I'm going to sell and generate money out of it, or I'm going to consume. Bottle aptina, I'll sell and make money. I can't consume. I can consume. If I take it for my household purpose, it will be consumed only. 1 second, ma. I'm coming. 1 second. The culprit for this problem, no? Anita ma'am. This, if I sell it, I'll get money out of it. I'll generate income out of it. So it is my future economic benefit. Or I'm going to use this bottle for my own self. Got it, not got it? I'll do it. How will I get the benefit? How will I get the benefit which is called as future economic benefit? One by selling. Consumption aptina, as the owner, I'm not consuming it. I'm giving this bottle as a gift to my employees on the Diwali occasion. Now, vella poi vaangano. Vaangradhukku badala I give it to my employees itself. When I'm going to give it in future. So it is going to give me economic benefit, no? Yes or no? Yes. If all these 5 conditions are satisfied, until I sell this, I'll be recording this as asset in my books of accounts. For you to record asset in books of account, how many conditions has to be satisfied? Generally 3, but 4th condition I put in the example. So what are the 3 conditions? For you to record an asset, there are three conditions. What is it? First of all, there should be a resource. This resource should be under your control. Ownership is not necessary. Ownership irundalo okay da, illenalo okay da. But what should be there? Control of that asset should be there with you. Means you can do whatever you want to do with that asset. Nobody can question you. You can do whatever you want to do with that asset. Nobody will question you. That is control. And this should come out of a past event. And this should generate future economic benefit. So what is the economic benefit here? I will sell this in future. Since all four conditions satisfied, inventory is an asset. Super, sir. Next. Debtor or trade receivables. Is this asset or not? Company sold goods on credit. What is this resource? Oh my God. I think Purvi, I need your help to get a capture card from your shop. Not now. Very soon. Okay. Now is it visible to all of your screen? I mean, online people, is the screen visible to all of you? Okay. What is it? Sir, it's a resource. What kind of resource? Amount receivable. Now come back here. What is the meaning of resource? Resource means something which is valuable. So I have to receive the money from debtor. Is it valuable or not? Yes. Is it an item or is it a right to receive? It's a right to receive. Can you touch it? No. Can you touch it? No. So debtor is a resource, which is a valuable resource, which is in intangible form. And from this, I'll generate money in future. If I have 1 crore debtor in my books of accounts up now on asset side, means what? This much money I'll get in future. I'm getting cash flow in future. I'm getting future economic benefit. Hence, debtor is my asset. Okay, first is resource. Second, on this debtor, do I have control? Yes, because company has got the legal right to collect the money. When I say debtor 1 lakh, he has to pay up, he has to pay. No further question asked. He has to give. If he doesn't give, I'll drag him to the court and recover the money. So I have control over that particular debtor to receive the money. And this is arising out of a past event. What is the event? Sale already made. What is the benefit I'm getting? From this debtor, I'll get cash in future. So I'm getting money in future. I'm getting economic benefit in future. All four conditions satisfied. Hence, debtor is an asset. Patent and trademark. Company purchases patent. Let's say I'm a pharmaceutical company. I got a patent or a trademark to manufacture a COVID vaccine. And this patent is there, registered in the name of scientist. But he has given this patent to me for 10 years. How many years? 10 years. 10 years. Got it, no? Vaccine was developed by whom? Formula. Scientist. Does the scientist have a huge factory to do bulk manufacturing? Can he supply that all over the world? Does he have a strong logistics? No. Avanga work vandu lab la vandu work pandradha. They don't know how to do the business of it. So that formula is there, no? The doctors will patent in their name. It means what? That formula has been developed by them. But since they cannot use it for commercial purpose, they will give that patent to a pharmaceutical company so that they are given right to use that formula, develop the medicine and sell the medicine for commercial purpose. Got it, not got it? As a pharmaceutical company, to get that patent, I paid 100 crores. How much money? 100 crores. And for 10 years, I'll use that formula, manufacture medicine and sell across the countries, different countries. So this patent is asset or not? First, is it a resource? Yes, it's a legal right. So what is a resource? A resource is a valuable item or a right. Is patent an item? No, it's a right. Right given by the scientist for you to manufacture the vaccine and sell the vaccine. It's a valuable right. Irka liya irka. Is that formula for 10 years under my control? Yes. With that formula, can I manufacture how much ever vaccines I want per day? Or can the scientist restrict me? Scientists cannot restrict. Scientists said this vaccine formula is with you for 10 years. Do whatever you want to do. But it is under my control. So control is there because only company can use it, and to whatever extent they want, they can use it. And this is resulting out of the past event of purchasing that patent from the scientist. And using this formula and manufacturing this medicine, what is pharmaceutical company going to do? Generate money. That is called as future economic benefit. Hence, patent is an asset. What asset? Intangible asset. Intangible asset. Got it? Not got it? Yes, boss. Yes, sir. I'm coming one by one. My examples are not over. नहीं आएगा भी. नहीं आया तो मेरे को बोल. Machine purchased but sold in the same year. Machine purchased but sold in the same year. Machine purchased, sold in same year. Laptop वांगना. Thinking that I'll use this for my studio recording purpose. After 2 months, I got to know this laptop is not compatible with this OB Studios. This studio recording. This actually happened with me. Not laptop. I got one tab. I got one tab. Touchwood, because of Nanda, it is usable. But until Nanda came into picture, we tried for 1 week. We got one Galaxy Samsung tab அப்படின்னு சொல்லிட்டு அது டேப்ல எல்லாம் எடுப்பேன்னு சொல்லிட்டு எல்லாம் அதுக்கு ஆசையா வாங்கினேன் நான். But in that we had some connectivity issue. 1 week I tried, struggled, and I left it. Then I started taking class in my laptop only with studio recording. Imagine after that Nanda came and resolved the issue, and now I can use it, but I'm not using it for a different reason. But imagine if Nanda did not solve it. I got that device for the purpose of using my recordings, for making recordings. Definitely I'll use it for more than 1 year, 2, 3, 4, 5 years. Correct? Opponent is asset. But imagine I'm buying this device, this tab, and I get to know after 2 months that it is of no use to me. I'm not going to use it. I'm just going to keep it in my bag and leave it. I'm not going to use it only. That kind of situation we're talking about. And the Mario situation. So now, what is a resource? It's a machine, sir. It's an item. What kind of resource it is? It is an item, valuable item. Is it controlled by the company? Yes. That tab is under my name. I'm using it. I have full control. I can do whatever I want to do with that tab. I can break it. Nobody can ask me because I have a control over it. This is resulted out of past event. I purchased it. Or sometime I can take an asset on lease also. Is there any future benefit? If I use that tab for my business, if I generate money out of it by taking classes up Tina, then future benefit is there. But I said, I purchased a tab, machinery, but I'm selling in the same year. Selling it then and there. Am I getting any future economic benefit? Future means what? Next year, next to next year. Am I getting any future economic benefit? No. Then the tab what I purchased in current year, which I'm going to sell in current year, can I take it as asset? No. You will take it as expenditure. You will take it as expenditure. You will not take it as a capital expenditure. You will take it as revenue expenditure. Got it? Not got it? Not treated as an asset at the end of the year. Treated as expenses or losses in the P&L. This question may come in the exam. Okay, like this, a question has been already asked in the exam. Got it? Not got it? So whatever we are discussing so far, it's not useless. Based on this, already the question has been asked. Machinery purchased but sold in same year. No future economic benefit. Okay, we'll see the question. Company purchased a machine and it became outdated in the same year and was not used, which they are planning to sell in future. Here, the machine is purchased but sold in next year. But the previous question was, machinery purchased in current year, it became useless in current year, sold in current year. So I thought that my student may ask, sir, asset purchased current year, it became useless in current year, but I'll sell it next year. So one question, selling in the same year. One question, selling in the next year. Asset purchased, not going to be used, but I'm going to sell next year only. Now that device will be called as asset or not. Tab irukliya vaangirken. I've got the tab. After 2 months, I decided that I'm not going to use it. That year itself, I've sold the tab also. So that is my expenditure. When I sold the tab, I got money. That is income. Expenses is what? The tab ka cost what I paid is expenses. So can I record that as asset or expense? Expense. Now the question is ulta. One additional step. Tab purchase current year. After 2 months, I got to know useless in current year, but I'm not selling in current year. I'm selling in future year. Second year, third year, I'll sell it future. But I'm not going to use it for my business. I'm just going to keep it idle. I'll sell it in the future. Now the question is, can I record that tab as asset or not? That is the question. You tell me now. With so much that you've learned from me, Can I record the tab as asset or not? Okay, one says no, one says yes, others yes. Open your mouth and answer no. Even if you don't know, say inky, pinky, ponky, father had a donkey. Why did we learn that in childhood? To use now, to apply now. Apply now. What to do, what not to do. இப்படி திரும்ப முறைச்சு பார்த்தா ஆன்சர் வந்துருமா? அப்ளை பண்ணி பயம் தான் வரும். ஆன்சர் எல்லாம் வராது உங்களுக்கு. நோ, she shifted answer. No ன்னு சொல்லிட்டான். Which donkey fellow said yes first? One. That's all. Only one donkey fellow says yes. No. Rest all no. Can I assume all of you say no? All of you no say no. Don't say yes and confuse me. No na no ன்னு சொல்லுங்க. No. Only one donkey fellow is right. All of you are wrong. Now listen to the answer. Sir, first of all, this tab, is it a resource? Yes, because it is an item, valuable item which I can use in the business. That's the difference today I'm using or not, but it's a valuable item. Okay. Is it controlled by the entity? Yes. Company has the full right. Even if I break this tab, will you come and ask me why did you break? No. This is resulted out of past event, which is what? Purchase of the tab. Am I getting any future benefit? Yes. Future next year, I'm going to sell it. I'm going to sell it. So it will generate future cash flow upon sale. So future economic benefit is coming or not coming? Yes. So until I sell, this will be treated as asset. This will be treated as asset. Got it? Not got it? Future economic benefit doesn't mean that it should generate only income. Economic benefit means what? Not income. Economic benefit means cash flow. Either flow in cash or kind. But some way or the other, something should come to me in future. It is not necessary that it should be resulting only as income. It need not be income, but something I'm getting out of it now. Upon economic benefit. That is economic benefit. Okay, not okay. No future benefit here means that I'm not going to use tab for my company. That's why it means no future benefit. I'm not going to use the tab for the purpose what I've purchased. That is no future benefit. Got it, not got it. Now here, no future benefit aptina. Don't think that no future benefit means no future economic benefit. That's what you assumed. No future benefit means I'm not going to use that in my business. But I'm going to sell, no. From that, paisa is going to come, no. Paisa, what I'm going to receive is future economic benefit. Should be very clear with the terminology. If you're clear only, then you can apply. Like this, only complicated questions will come in your exam. Light difference da. Ana motta answer maaridu. To this level is what you have to prepare. If question comes as MCQ apdina, this type of questions only will come. Got it, not got it? What you thought? Oh, I says giving 30 mark MCQ. I'll do inky pinky ponky, father has a donkey and pass நினைச்சிட்டு இருக்கீங்களா? நீ அவ்வளோ யோசிக்கும் போது ICAI எவ்வளோ யோசிப்போம். அவன் அல்வா மாதிரி 30 மார்க் கழி கொடுத்துருவானா? சான்ஸே கிடையாது. You will be able to answer the MCQ questions only if you are conceptually strong. Out of 30 mark questions, I'm telling you, at least 20-25 mark MCQ question is going to be fully conceptual. Super duper next level conceptual. If you want to score good marks in MCQ, you need to deep dive down to this level. Got it, not got it? Next, machinery, finance lease. I've taken a machinery on finance lease. Yes. Previous question is which question? 5 or 6? 4 or 4? Fifth one. Okay, she's telling, sir, it is outdated. No, sir. Outdated means I cannot estimate the value. No. Okay. At least it will go for 5 rupees. I'm not telling you. See, now listen, she's telling, sir, you said this is outdated. If you use the word scrap apdina, scrap means what? I'm not going to fetch any value. Zero value apdina. Is economic benefit there in future? No. Then in that case, I will record this asset as expenditure. But here, have they told anything about scrapability? No. Which means what? I'm going to sell at some decent amount. I got tab for 70,000. Maybe somebody will take next year for 30,000. If they use the word scrap apdina, expenditure. But if the word scrap is not used apdina, it is going to be sold at some value, decent value. Because it is purchased now only 2 months ago. And I'll sell it after 1 year. Anybody will buy, no? Or phone 5 years kalchi vikkida apdina, tab 1 year kalchi vikkada. But if you say that asset will fetch you zero value apdina, then the entire amount has to be recorded as expense. Now it's because there's no future economic benefit. Got it, not got it? Okay. So in this question, Purvi asked, what if the value of the asset is zero in future? Aptina, then the entire asset should be recorded as expenditure, not as asset. Now there's something called as machinery taken on finance lease. Company takes a machine on lease for 5 years. Now what is lease? I give the example, no? Anita ma'am purchased laptop. Right? She's called as lessor, owner. On records, who's owner? Anita ma'am. But that asset she has leased to me for 5 years. What is life of the asset? 5 years. I'm going to use the asset for 5 years. So who's actually going to control the asset? I. So who should record asset? I. Got it, not got it. So ownership is not the criteria to record the asset. What is the criteria? Control is the criteria. Got it, not got it. So if any person or any entity is taking any asset on lease, Aptina, so we have to look into a concept called as substance over form. Substance over form. We have to see substance over form. So in form, in principle, in record, who's the owner? Anita ma'am. But in reality, substance means what? Truth. Reality. In reality, who is actually using that asset? Pratik sir. Who is having control? Pratik sir. In substance, who's the owner? Pratik sir. In reality, who's the owner? Now, in reality, who's the owner? Substance means in reality. Reality. Form means what? As per document, as per record, Anita ma'am is the owner. But in reality, who's using it? Pratik sir is using it. So substance talks about reality. Substance talks about originality. Not on document what it is. In reality, what is happening? In reality, I'm using the laptop. Who's controlling it? I'm controlling the asset. So I have to look over substance over form. So in substance, in reality, who is the person controlling the asset? That person should record the asset in the books of the accounts. Not the person who is owning it. Got it, not got it. Substance over form means that the transactions are recorded. Substance over form means transactions are recorded based on their economic reality, based on the reality of the record, not merely based on the legal form. In legality, as per document, who's owner? Anita ma'am. In reality, who's using it? Pratik sir. So recording should happen on reality basis, not on legal basis. Who's saying this? Who's saying this? Framework is saying this. Who's saying this? Framework is saying this, because we're all studying this under the context of framework. This meaning is coming under asset. Asset is nothing but elements of financial statement. This element, who's defining? Framework. Got it, not got it. Yes. हाँ हाँ किसका बोल रही है? Let me complete. I'm coming here. Now, what are we talking here about? What is the resource that we are talking here about? It's a tangible item. Tangible, valuable item. Tangible, valuable item. Is that resource or not? Yes. In the meaning of resources, tangible, valuable item is the resource. Okay. First of all, I have a resource. Second, in legality, on records, who's the owner? Company is not the owner. Who's the owner? Anita ma'am is owner. Got it? In legality, who's the owner? Anita ma'am is owner. But actually, in reality, who's controlling it? Company here means Kalpavriksha Academy. Kalpavriksha Academy is a legal, Kalpavriksha Academy has got the legal right to use it. So in reality, who's controlling it? In reality, who's controlling it? Company. Pratik sir, Kalpavriksha Academy. This control I got from what event? One past event called as lease agreement. So there's an agreement signed between Anita ma'am and the company, where Anita ma'am is given the control to the company. So there is a past event. Am I getting future benefit? Yes. By using that machine, I'll get benefit. By using this laptop, I'll get future benefit, future economic benefit. So yes, the company is generating future economic benefit. Since all four conditions satisfied, this machine, who should record as asset? Lessor or lessee? Lessor is Anita ma'am. Lessee is company. The person giving the asset is called as lessor. The person who is using the machine is called as lessee. About this we'll discuss in depth in AS 19. We'll discuss in depth. Got it, not got it. Conclusion. Applying the principle of substance over form. Asset is recognized in the books of lessee, which is user of the asset, that is company. As the lessee controls asset, enjoys the economic benefit, even though legal ownership is resting with the lessor, who is the owner of the asset, which is Anita ma'am. Even though ownership is with Anita ma'am cannot record this as asset. Now, in-depth accounting of this we'll study in AS 19. How lessor will record, how lessee will record. In-depth we'll do accounting in AS 19. Got it, not got it. At superficial level, who should record asset is what we're discussing here. So framework is talking about the outer line perspective. அதுக்குள்ள இருக்கிற மசாலா வந்து அந்தந்த ஏஎஸ்ல நீங்க பாருங்கன்றாங்க. Got it, not got it? Oh. Okay, what is your doubt now? Now the question what she's telling is consumption. Okay. Sir, I'm into business of buying and selling this laptop. Sorry, laptop. Bottle. Sorry, bottle. I'm into business of buying and selling bottle. Bottle is my stock inventory asset. If I sell this in future and get money out of it, future economic benefit, control is there, resource is there. Until I sell this inventory is my asset. But in the current year, I'm consuming this bottle. Consuming means literally I'm not eating this bottle. I'm distributing this to my staff this Diwali. In the Diwali, I'm going to distribute this bottle to my staff. Am I generating any future economic benefit? No. Future economic benefit ka point will lapse. In that case, this inventory worth, let's say what, 500. Okay, she's like chiller bottle only have, sir. 500 ka bottle this is. Okay. This 500 worth of bottle, which is asset until I gave it to my staff. After giving it to staff, this becomes my expenditure. So I'll transfer the inventory to the expenditure. That's what we did in 11th, 12th and foundation also. Yes or no? Goods consumed. Goods were distributed to the staff. So you transferred that cost to the staff welfare expenses. Yes or no? It is no longer asset because I cannot derive any future economic benefit. Yes, boss. With liquidity. Company means Kalparish Academy is going to liquid. Now she's asking if the company is going into liquidation, apdina, who will that asset benefit? Who will enjoy? Whatever paisa is coming from that asset, who will enjoy? Who's controlling it? Who's going to derive the future economic benefit? Because I have done already contract with the lessor. Lessor is getting paisa no every year. So in the liquidation, if I sell or not sell, whether money is coming to me or not coming, asset is there in my book. So who will record the benefit out of it, or while closing the asset, who will pass the entry for closure of asset? Company only. Now, so whatever the asset is sold, money comes, the lessee will enjoy. Lessor will enjoy that part of the contract value which has been signed in the agreement. As per agreement, what is to be given to the lessor, that will be given. Camera also went in sleep mode. Oh my God. Inna sodhana enakku. Now. Okay. Now the question what she's asking is, sir, I've taken a land on lease for 20 years, right? Now the question is, at the end of the 20 years, or let's say before 20 years is lapsed, the company is gone into liquidation. Okay, let me frame this question in proper way. Landowner, who's also called as lessor. This is company. Why Kalparish Academy? Company. Lessee. The contract is for 20 years. Means what? The landlord, that is lessor, is given the land for 20 years. Okay, wow. The question is, in 15 years itself, the company is winding up. Now the question is, when this land was taken on lease by the company, will the lessee record this land in the books of accounts or not? So first question is, resource is there or not there? There. It's a valuable item. Valuable, tangible item. Okay. Second, what is second criteria? Control. Control is there or not there? Think and respond. Control is there or not there? In that 20 years, can you do whatever you want to do with that asset? Can I do whatever you want to do with that asset? Cannot sell it. Okay. Apart from selling, can I do anything with that asset? Can I do anything with that asset? As per the agreement, I can do what is allowed as per the agreement. Now, on case-to-case basis, we have to decide whether this control is sufficient enough to actually exercise that literal control what we're talking about. If yes, then we'll recognize this as asset. If you say, yes, sir, I can do whatever I want to do with this land, I have complete control, complete liberty, then I have a control. Using this land, am I generating future economic benefit? Yes. In such case, this land, who will record as the asset? The company will record. The company will record. So for this, you have to strictly follow the accounting standard 19 for accounting purpose. Whatever they say, within that we have to play, right? The land is recorded as asset by the company. Land is recorded by asset by the company. Now, in case in future, the company sells the land because it is going to liquidation. Correct? That was your question, Lakshita. Company goes into liquidation. After this, what is your question? Who will enjoy the benefit of the land? The question is, can you sell the land?
No.
Upon liquidation, the contract will get cancelled. So ownership goes back to the lessor. Can lessee still show that particular land as asset? No. So you have to reverse the transaction and not record that as asset. And rather, whatever is the amount hanging in the asset account, unwritten off portion, you have to write it off. Got it? In depth, you will study where? 19. I can give information, but it will be too much for this chapter. Right? So I've given a small information required. So what she asked is, when the asset is sold at the time of liquidation, what will happen to the asset? From my books of accounts, the asset will vanish. How it will vanish will be dealt with as per AS 90. But ownership will go back to the lessor. Got it? Not got it? Okay. Chala. Very quickly, meaning of liability. About liability, in depth, I'll be discussing in accounting standard. Accounting standard. Fast. 29. September. I don't expect Jan people to know this. September people, you're going to write exam in next couple of months. Where did I discuss liability with all of you? Liability ka meaning, provision ka meaning, where did we discuss? AS 29. Madam, liability, provision, contingent liability was discussed in AS 29. So for Jan people also, I'll be discussing all of this in AS 29. Now, just understand, liability means what? Liability should be recognized by the enterprise when there's a present obligation. This present obligation is arising out of past event. So what is a present obligation? Imagine my son, 5 years old. I take him to departmental store. He's taking one chocolate from the stand. அவன் ஹைட்ல வந்து பாத்திருப்பீங்களா அந்த பில் கவுண்டர் கிட்ட பாத்தீங்கன்னா கரெக்டா அவங்களோட ஹைட்டுக்கு ஏத்த மாதிரி they'll keep that stand rack where they can easily take the chocolate. So like that, he took the chocolate and kept it back. Can the the person sitting in the bill counter compel me? No, your son took the chocolate. No, you have to buy it. Like that, can they compel us? No. There's no obligation for us to pay the money for the chocolate. By chance, he took the chocolate. He just tore the wrapper and kept it back. He's not eaten it. Hello, he's not eaten it. He just tore the wrapper, kept it back on the stand. Now, can the person sitting in the bill counter compel us to buy? Yes, because there's a present obligation which arises out of the past event. So what is the present obligation? Obligation to pay money is called as present obligation, which is arised out of the past event of carrying the paper. Got it? Not got it? Okay. Can I record this as liability until I pay? So I'll tell that bill counter person, Anna, I don't have money now. Tomorrow I'll come and pay. So today night I have to go home and pass entry for this drama. What has happened? Tonight, should I show liability or not? Present obligation because of past event. Tearing the paper is a past event, because of which I have a pressure to pay the money tomorrow. So tonight, do I have the liability or not? Yes. Second question I have to check is whether this will require outflow of resources. Should I pay money or not? The answer is yes. And do I know what exact amount to pay? Yes. So one, there is an obligation to pay because of past event, because the wrapper is torn. And this obligation is resulting into outflow of money. If the shopkeeper says, no, Kammi, theram pantala, utringa. Upon am I going to pay? Is the outflow of money is going to happen? No. But if the shopkeeper says, no, you have to pay the money apdina, outflow of resources happening? Yes. And third, what amount I have to pay exactly, do I know or not? Yes. Certainty means what? What amount to pay? 100% I know. If all the three conditions satisfy, then you should record the liability in the books of accounts. About this, in depth I'll discuss in accounting standard 29. In depth I'll discuss. Now this trailer I've given. To record a liability, three conditions are required. There should be a present obligation arising out of past event. This should result into outflow of economic resources, and you should know what amount exactly to be paid. Okay, wow. Let me take your example. All of you have taken services from me. September people. Let's say by June end or July, I'll be completing your syllabus. Do you have the present obligation to pay or not? I've not taken money from you. Imagine like that. Imagine September students, they got shocked. என்ன திருப்பி சார் பணம் கேட்கிறாரான்னு சொல்லிட்டு. Imagine I've not taken money from you. I told after completing syllabus only, I'll take money in the month of June 9. Syllabus also over. Please tell me, do you have present obligation or not? Because you've enjoyed the services. Past event, what is your past event? Taking services from me is a past event. Because of that, obligation is there? Yes. Are you supposed to pay money which is resulting into outflow of resources? Yes. Exactly what amount to pay, do you know? Yes. So until you pay, the day I completed the services, no, the day I completed my syllabus, that day, night, you have to pass an entry for liability. Got it, not got it? Clear or not clear? Okay. Now comes meaning of equity. I'll give break. I said I'll give break. Meaning of equity. Equity is defined as residual interest of the asset of enterprise after deducting all liabilities. Oh, you, such a tight meaning. Sir, in simple language, what is equity, sir? Capital plus reserves is called as equity, which means any money that belongs to owner is called as equity. Tell me one thing, this is balance sheet. Asset side 10 lakh is there. Liability 6 lakh is there. Capital 4 lakh is there. Can I say this entire 10 lakh belongs to owner? Entire 10 lakh asset belongs to owner. What will liability owners do? I mean, liability holders do. So we'll give them an ice cream shot. Top, they'll eat ice cream. Can you take the money first? If asset is sold today, can the owner take the money first? No. First, what are you supposed to do? Make the payment to all the external liability holders. Make the payment to external liability holders. Where did we study this? Order of making payment, where did we study? First in 12th standard, we did one topic called as dissolution of partnership. There we studied one. Then where did we study? Then where did we study? Order of making the payment, where did we study? Where? Order of making the payment, where did we study? In which order to make the payment? Winding up of accounts la solra. Oh my God. No idea? Forget it. Leave it. உங்ககிட்ட போய் கேட்டேன் பாரு. ஒரு business close பண்ணும்போது there's an order in which you have to make the payment. First you have to make the payment to the external liability holders. யாரு? Banker, lender, creditor, bills payable. Illa third party. You have to make all the payment to third party. If any money is left over, you'll make the payment to the owner. Purida. So first all payment should be given to third party. If any money is left over, that goes to the owner. So imagine 10 lakh worth of asset, you sold it, and exactly 10 lakh you got apnina, 6 lakh ka liability, you'll make the payment first. Then what are the balance money is there? No, that belongs to the owner. That is what they're telling. Equity is defined as residual interest in the asset. Interest in the asset means what? Interest means the money that I'm getting from the asset. No, that is my interest in the asset. Why do I like asset in my business so much? Because that is helping me. That's why I have interest in the asset. Purida. Do I have all interest in the asset? No, I have only residual interest in the asset. So what is my total interest of the asset? Interest na the value of the asset. Do I have the total value of the asset under my control? No, I only have the residual value of the interest. I have the residual value of the asset. Means what? Out of 10 lakh, I'll deduct all the liabilities. மிச்ச மீதி இருக்கு இல்லையா? மிச்ச மீதி தான் என்ன சொல்லுவோம்? Residual ன்னு. The chiller amount which is remained after paying liability holders, no, that is called as residual. So what is equity? Equity is defined as residual interest in the asset of the enterprise, which will come, this residual interest, how will it come? After deducting all its liabilities. So what is the equation for equity here? Equity is equal to assets minus liability. This somewhere you have studied. In 11th standard, we did one chapter called as accounting equation. There we studied. And you know what? You have that in your syllabus. You have to do now accounting equation. So after I complete this theory, we'll do one question where we'll do accounting equation. 11th standard topic, again studied in foundation, now in intermediate. Oh my God. Once again, equity means what? It is excess of aggregate asset of the enterprise over the liability. Shh. What is equity? Excess of aggregate asset. What is the total aggregate asset? 10 lakh. From that, if I minus aggregate liability 6 lakh, what is excess aggregate asset? Remaining 4 lakh. That is called as equity. So equity is asset minus liability. Equity means what? The money that belongs to the owner, owner's claim, which is capital plus reserves. Capital plus reserve. Now, no questions. I take it. I will do very fast. Already I'm very slow. What is the meaning of income? Income is increase in economic benefit during the accounting period in form of income is increase in economic benefit during the accounting period. During the accounting period, there is an economic benefit. Increase in economic benefit, which results into inflow, either inflow or enhancement of asset or decrease of liability. Inter வந்துட்டீங்க. What is income na என்ன சொன்னீங்க 11th 12th foundationல? Anything that we earn in the business is income. நீங்க படிச்சதுக்கும் இதுக்கு சம்பந்தம் இருக்கா? ஏனி வச்சா கூட எட்டாவது அளவு டிஃபரன்ஸ் இருக்கு. What you have studied and what is the language used here? Nonsense. So, income is nothing but which is increasing the inflow of the business, enhancement of asset, decrease in liability. That result in increase in equity other than those resulting to the contribution of equity. Dangerous fellow this is. Until I explain this dangerous. Once I explain this easy. Now listen to very carefully. What is the meaning of inflow economic benefit? There are three terms used here. Inflow economic benefit, enhancement of asset, decrease in liability. இது மூணுமே நடந்தா இது உன்னோட இன்கம்ன்றாங்க. If all of these three happens or any one of these three happens, it results into your income. So first let's talk about the first item, inflow of economic benefit. What is the meaning of inflow of economic benefit? Mind you, all this is not there in your textbook. It's out of my effort. I'm sitting and teaching you all this. Clap for me. Inflow of economic benefit refers to increase in economic resource of an enterprise arising from the receipt of cash or something equivalent to cash, which is money in bank, or creation of receivable as a result of revenue generating activity. If I do some operation in my business, which is generating revenue in my business, that is called as inflow of economic benefit. Example, cash sales. Cash sales. Is it income or not? Yes. Cash sale is an inflow of economic benefit. Inflow of economic benefit. Economic means what? Either I'm getting something in cash or equivalent to cash or in kind. I'm giving services to you. I'm giving teaching services to you. You will say, sir, I will not pay fees, sir. Instead, I'll gift you one iPhone, sir. Oh, I'll gift you one iPhone. So now the iPhone, what I get, is it not my inflow of economic benefit? Who said economic benefit is only money? Money or in kind, both are economic benefit. Yes or no? Yes or no? Cash sales, economic benefit. Inflow of economic benefit. It is income. What are we learning now? We are learning what is the meaning of income. Income என்னங்கிறது இப்பதான் படிக்கிறோம் இன்டர்ல. Second, if I receive interest, it is my inflow of economic benefit. Rent received, dividend received, credit sale. All these are inflow of economic benefit. Sir, credit sale how, sir? Wait, I'll come and discuss that little bit later. First, are you clear with what is inflow? Okay. Next, there is something called as income. What is it? Enhancement of asset, increase in the value of the asset is income, amma. Eppadi? Enhancement of the asset refers to increase in the value of already existing asset. You already have an asset existing. In that, there is an increase in its value, and that increase in value is your income. That increase in value or such increase in value is your income. Enhancement of asset refers to, what is enhancement of asset? It refers to increase in the value of what already existing asset of an enterprise and is not arising from the fresh inflow. I did not do any business operation. நான் business operation பண்ணி அதை சம்பாதிக்கல. அது தானா வந்து value increase ஆயிருக்கு. Why? Because of revaluation or appreciation or other factors. For example, sir, I have a land. This land was purchased 5 years ago for, let's say, 50 lakh rupees. 5 years ago, I purchased the land for 50 lakh rupees. Do you think that the value of the land today also will be 50 lakh only? It'll grow and become somewhere, let's say, 60 lakh. So there is increase in the value of the asset, yes or no? Today, if I'm revaluing this asset, what is the revaluation entry? Tell me. In depth, I'll discuss this in AS 10. But to some extent, we have discussed this in the foundation also. In the depreciation chapter, we have discussed. Keeping that in mind, can you tell me the entry for revaluing the asset? Land account debit to revaluation reserve. Revaluation reserve irukku illaya enadhu? Reserve is nothing but your profit. What profit? Capital profit. What profit? Capital profit. Isn't it your income or not? Isn't it your income or not? Yes. Yes, that's a different story. How the income should be treated. How the income should be treated. Will it go to P&L or will it go to balance sheet? That's a different story. But does it initially, prima facie, qualifies income or not? Yes. Increase in the value of the investment. I invested in the share market 10 lakh rupees. Now the value of that asset is 13 lakh rupees. How much? 3 lakh is the profit. Now I want to record that investment at the market value. I want to record the asset at the market value. Indians will insist on that. So when I record this, did I receive any inflow of money? 10 lakh worth of share, it became 13 lakh, it happened. 10 lakh worth of share, it became 13 lakh. Did I sell it? No. Investment in my books is how much? Already, balance sheet. 10 lakhs. Now I want to make it 13 lakh. Now what is entry for this? Investment account debit to revaluation of investment. Now how to do this, we'll discuss later. But is this prima facie income or not? Is this prima facie income or not? Either the treatment, whether it will go to P&L or whether it will go to reserve in the balance sheet, that is something different we have to discuss. But prima facie, is it your income or not? Yes. So whenever there is any enhancement in the value of the asset because of revaluation, appreciation, or other factors, there is an income coming into picture. When the value of the asset increases, it is your income. In 12th standard and foundation, we studied one chapter called as partnership, wherein CPSR, admission, retirement, death, in all 4 cases, we used to do revaluation of asset. When the asset used to be upwardly revalued, what entity did you pass? Land account debit to revaluation account. Revaluation you credited, telling what? Credit all income and gain. Credit all income and gain. So on the revaluation amount, income yaar decide panna? Framework decided. So framework gave the meaning of income. Accounting standard, இது income இருக்கா இல்லையாங்கிறது அதோட ட்ரீட்மெண்ட் எப்படி இருக்கணுங்கிறது அது ஃபர்தரா டிசைட் பண்ணும். Accounting standard will give the treatment of such item. But framework says this is income. Got it, not got it? Tell me. Okay. Sir, how is a decrease in liability is income, sir? Think no. There's a creditor to whom I have to pay 1 lakh. He says, just pay me 90,000 and finish it. Then how much money should I not pay? 10,000 money I should not pay. Any money that I don't pay is my gain. That is called as income. So in my business, I can generate income in 3 forms. One, I do the regular business operation, that is sell goods, provide services, and generate inflow of the money. So that is inflow of economic benefit, my income. Or second, income is coming because of enhancement of the asset value, which may be because of revaluation, appreciation, or other factors. Third is decrease in the value of the asset. The money that I don't have to pay, the liability that I no longer need to pay is my gain. Gain is also termed as income. Income is broader perspective. In that sale will come, turnover will come, income will come, gain will come, everything will come under that. Got it, not got it? Decrease in liability means reduction in the amount of the business. Deduction in the amount the business is obliged to pay to the outsider, resulting in a gain. Creditor waived the money. Settlement of liability at discount. 1 lakh liability I settled at 90,000. At 90,000. How much money did I not pay? How much money I have not paid? 10,000 I have not paid. It is my gain. This is what is given as the meaning of income in the framework chapter. Okay, not okay. Likewise, expense is nothing but decrease in economic benefit. Income is increase in economic benefit. Oh, before that I forgot to explain. Come back here. What is income? Income na increase in economic benefit. When this increase happened? In the accounting period, current accounting period, which is resulted because of either inflow or enhancement of asset or decrease in liability. In income, either inflow of asset, now enhancement of asset or decrease in liability. That result in increase in equity. If income increases, profit will increase. Ultimately, the profit is added where? To the capital. Capital, another name is what? Equity. So this will result in increase in equity. Other than those resulting to the contribution from equity participants. So equity, capital increases because of 2 reasons. One is because of income. Second, owner gave further money. Owner gave additional capital. Capital increases, equity increases. Will I call it as income? No. If equity increases or capital increases because of, funds given by the owner, Will I construe that as income? That is not income. That is what they're clarifying here also. Ipo income generated because of inflow or enhancement of asset or decrease in liability is actually the income which will increase the value of my capital. If capital is increasing because of any other reason, what reason? Owner contributed additional capital, owner withdrew the money. Because of that, if capital fluctuates up and down aptina, that is not income. That is not income. Got it? Not got it? So additional capital contributed by equity participants. Equity participants ne owner. So if any contribution is done by the owner in form of capital, and because of that, if the equity increases, that is not income. Okay, not okay. Okay, not okay. Okay. Now we are next discussing about meaning of expense. Expenses decrease in economic benefit. Income is what? Increase in economic benefit. Expenses decrease in economic benefit. In which year? In current accounting period. So what is expense? Outflow of money. Outflow of money is expenditure. Depletion of asset is expenditure. Expense includes loss. Incurrence of liability is expenditure. Paklama. What is outflow of money? Outflow of economic benefit. Cash purchase, interest paid, rent paid. All these are called as outflow of money. Outflow of money. Got it? Not got it? Okay. Before that, I forgot to tell one more point. Credit sale. Credit sale, is it inflow of economic benefit or is it enhancement of asset? Credit sale happened because of economic benefit. I mean, I did some economic activity which resulted into economic benefit. So credit sale will be categorized under inflow of economic benefit. You will not put under enhancement of asset. Got it? Not got it? Irukra asset தானா வளர்ந்துச்சு அப்படினா enhancement of asset. But debtor உட்கார இடத்துல increase ஆயிடுமா? இல்ல. You have to put efforts to sell the product, convert that customer into debtor. So it is inflow of economic benefit. So credit sale will be a part of your inflow of economic benefit and not enhancement of asset. Now clear or not clear? Okay. And when I come to expenses, slightly things will change. So that's why I wanted to focus properly. What is expense? First, it is outflow of economic benefit. What is outflow? Outflow of economic benefit refers to decrease in the economic resources of an enterprise arising from payment of cash. My economic resource is decreasing. How it is decreasing? In my pocket, I have 1 lakh rupees. That is my economic resources. From 1 lakh, if I pay 10,000 apnina, what is the balance money? 90,000. How much was my earlier economic resource? 1 lakh. Now how much it is? 90,000. Increased or decreased? Decreased. Why did it decrease? Because of expense incurring activity. I made the payment of cash I did. I settled my obligation. Because of that, my paisa reduced. My economic benefit reduced. So example for this is, if I do cash purchase, economic resources will decrease. If I pay interest, my economic resources will decrease. If I pay rent, my economic resources will decrease. Here I only focused about paid. I didn't put credit purchase here. Because credit purchase is captured separately in the third point where it talks about incurrence of liability. Liability incurred but not paid. Still this is expense, no? Credit purchase means what? I purchase the goods. It's my expenditure, but I've not paid it. Since I've not paid it, can I say I've not recorded as expense? Solla mudiyadhu. It's an expenditure of current year appadina, you have to record it. It's a liability. It's an expenditure. Got it? Not got it? Now, depletion of asset. When you use the asset, wear and tear happens. For that, does outflow of economic resources happen? For example, depreciation, amortization. For this, will outflow of economic resource happen? No. Ana the expense இல்லையா? அது cost இல்லையா? இருக்கு. So it is categorized under the second category, which is depletion of asset. Depletion of asset is your reduction in the value of economic resources, and we'll term it as expenditure. So what is expenditure? Expenditure is decrease in economic benefit. Got it? Not got it? Got it? Not got it? Okay. Inventory, instead of selling it, we have consumed it. Not sale, consumed. Only consumed. My inventory before consumption was 100 chocolates. All the 100 chocolates I consumed. Why people are laughing at me? All 100 chocolates I consumed. Now, inventory decreased or not decreased? Decreased. I've consumed for my own personal purpose. Aptina drawings. If I distribute this chocolate to all my employees, then staff welfare expenses. But expenses are not expenses. So these are the examples of depletion of assets. Now, incurrence of liability means what? It creates an obligation to pay the money in future, which does not involve immediate outflow of cash. I have to pay this money in future. Upon current, I don't have to pay. I'll pay this money in future. But this current year ka expenditure. For example, current year from employee, I got the services, but I've not made the payment of money. March 1 to 31st March, the staff has worked for me, but 31st March, I've not paid the money. When will I pay? In future. Got it, not got it. So liability part. One is liability part, two outstanding salary. But what will you debit? Salary. What is entry? Entry for that. Salary to salary outstanding. This salary, you transfer where? You transfer P&L as what? Expenditure. Appa the expense done, but you've not paid the money, but incurred the liability. So some liability if you incur, now you have to expense it off. You have to show that as expenditure. So outstanding expenses, interest accrued but not paid. All these are called as incurrence of liability. Incurrence of liability. So there's a liability on you to pay for which the service is enjoyed, the product is enjoyed. Apni expenses incurred. That means expenses incurred. The moment you say expenses incurred, that is your expenditure involving the decrease in economic benefit. Got it, not got it? Super. Now, based on this, we'll do one question. Too much of theory you did know. So this will look like theory class. To make it practical, we'll do one practical question. Oh my God. What a creativity, sir. For this, you will have to take. After this, Pakka promise, go home. Break only I'm giving, till Thursday. Now, example 2. Page number 2.16. 2 questions we are done. Practical questions we're going to do. Practical classes. Believe me or not, it's practical class. People are laughing again and again. I don't know why. A limited. Now, lovely question. This question is coming in exam. So please pay full attention. A limited has entered into a binding agreement. What is the meaning of binding agreement? An agreement has been entered in which both the parties have agreed upon something, which means one, let's say if this is an agreement to buy and sell, if there's a binding agreement to buy and sell means one person has to buy, another person has to sell. Once this agreement is done, you can't come and later say that I will not buy or I will not sell. That is binding agreement. What is binding agreement? Something where you have an obligation to execute the contract. Got it, not got it? Okay. A Limited is a company who has entered into a binding agreement with P Limited. What agreement it is? To buy a custom made machine. What is the meaning of custom made machine? It's not a normal machine which is readily available in the market. With that machine, you've done a lot of modification as per your requirement. As per your requirement, you've modified the machine. That is called as custom made machine. And it is for 40,000 rupees. At the end of 2021-22, before the delivery of the machine. Now, okay. Till first point, what is understood is A Limited has entered into binding agreement, an agreement with P Limited to buy a custom-made machine. So who's the buyer, who's the seller? First line talks about A entering into agreement with P to buy. But who's the buyer, who's the seller? After comma, that is P Limited to buy up, it talks about A buying it. Comma is not there, imagine. It should have come but not come. Now, this LTD, so short form ka full stop, that's not literally the full stop ka full stop. Now let's continue, please. A will buy a custom made machine from P. In this regard, they have entered into a binding agreement and the deal is for 40,000 rupees. Okay, not okay. Already machine is purchased or not purchased? Is the delivery happened or not happened? Not happened. Before the delivery, promise to buy has happened. Binding agreement and promise to buy in future. Full stop. Now they're telling at the end of 2021-22. That is before delivery of the machine. So which means in 21-22 machine is not going to be delivered. A Limited had to change its method of production. Their method of production is changed. So what? Because of change in method or the new method will not require the machine ordered and it will be scrapped after delivery. Oh my God. Whenever the asset is going to come next year, it will be scrapped after delivery. Literally my case only. I ordered a tab. After that, after 2 months, I changed my production method. Now this tab is no longer useful. In this question, they're going to scrap. In my example, I said I'll sell it in future. In my example, I'll sell this tab in future. Here they're telling that whenever the machine is going to be received, it is going to be scrapped after delivery. The expected scrap value is nil. Now, Purvi asked the question, no? Same question here. Same question here. The scrap value is going to be 0. Now, tell me people what to do. First of all, what question is this? In the concept, in exam, what concept are explained in what I'm supposed to talk about here? Two things we have to talk about. One, we have to talk about whether that custom-made machine is asset or not. And second, I have to talk about liability. If asset varudilla, ad asset expense appdi mudivu pannum. And the money you're supposed to pay, no, whether it is liability or not. Got it, not got it? No. So here they've explained 2 points. What is the meaning of liability? And second, what they have explained, what is the meaning of asset? So what is liability? Liability is recognized when there is outflow of economic resource in settlement of present obligation. So what is liability? Present obligation that can be anticipated and the value of the outflow can be reliably measured. Means what? There's a certainty in the amount of money to be paid. In the given case, A Limited should recognize the liability of 40,000 to P Limited upon delivery or upon signing the contract. Upon delivery or upon signing the contract. Liability is triggered at what point of time? Chalo, let's go back to notes. What is the condition for liability? There should be a present obligation. Do I have the present obligation? Yes, because you already signed an agreement which is having a binding effect. So tomorrow if the machinery is delivered, you have to pay the money. You cannot deny. So there is an obligation resulting out of past event. Signing of the agreement is the event. Because of that, there's an obligation on your head to pay the money. Okay. Upon delivering the machine, from my end, from the buyer end, is there any outflow of economic resources? Yes. I either have to pay in form of cash, check, or in some form or the other. Appo resources engai vittu poma. Resources and asset. Resources means asset. Will it go out of my hand? Yes. Do I know exactly what amount to pay? 40,000. All the 3 conditions satisfied. Hence, this is a liability to be recorded on the day of signing the agreement. Got it? Not got it? No. Then they explain about what is the asset. What is asset? What is the condition to qualify an asset? There should be a resource on which there should be a control resulting out of past event, which should result into future economic benefit. Is there any resource here? Yes. Machine is a resource. Machine is a resource. Resource means what? A valuable item. Nappadara worth boss. Valuable only it is. This machine is worth 40,000. Valuable or not? Yes. It's a valuable item. Second condition. And the machine vanduchu appadina, do I have the control or not? Yes. It is because of my control only. I'm proudly saying I'll scrap at 0 value. My machine, I'll do whatever I want to do with my machine. So control is there with me. Okay. Is it resulting out of past event? Yes. What is the past event? Contract signing, past event. Okay. Fourth condition. Will this result into future economic benefit? No. I'm going to scrap at 0 value. No future economic benefit. Is this asset? Imagine you're feeling very bad, no? The concept is sir போட்டு ரப்பர் மாதிரி இழுத்துருக்காண்டு அந்த 5 எக்ஸாம்பிள் மட்டும் அசெட் கொடுக்கல அப்படின்னா இன்னைக்கு அந்த விஷன் கிடைச்சிருக்குமா? To answer, we did 5 examples of asset that give you a vision. Without example, do you have that vision? No. That example and explanations gave you the vision. You don't believe me? You take the textbook and read what have they given the meaning of asset. No explanations. This is your homework. Read and come. இது மட்டும் படிச்சா புரியுமான்னு கேட்டு பாருங்க. I gave all the explanations by myself. Got it, not got it? So there's a lot of effort gone into it. I'm telling you, it's my open challenge. If anybody is teaching this chapter in this depth, most of the places this is omitted, to be very honest. Even if they take some place, no, they'll rush up like anything in no time. I'm telling you, this entire topic will be done in 2 hours. Today we have traveled only 1/3 of the topic. Whatever time I spent, no, only 1/3 I've completed. Remaining 2/3 is still pending. I'm telling you other places in entire 2 hours, this chapter is Swaha. Anyways, now tell me people, what should be the answer for that Napadara machine? When that machine comes to me, what should I do? Very good. When will you record this entry? When you record this entry? On the date of signing the contract. Purida. On the date of signing the contract in 21-22, I have a liability towards P Limited. To P Limited, 40,000. Okay, not okay. What should I debit? Can I debit as asset? No. What should I record this as? Loss. Because I'm not going to generate any future economic benefit. So, loss in change. Loss because of what? Change in production method. Purida. Account debit. This is loss. It is not asset. Because future economic benefit is missing. Hence, it is expenditure. Expenditure includes loss. 40,000. To P Limited, 40,000. And tomorrow when the asset is delivered, then we'll make the payment, no? Yes or no? So that time, what is the payment entry? P Limited account debit to bank. And loss being a nominal account, you have to transfer to the P&L account by passing a closing entry. How many of you don't know what is closing entry? How many of you have no idea what is closing entry? 11th I've discussed, 12th I've discussed, foundation I've discussed. Don't believe me, you can ask Ashmita. She's done 11, 12 foundation together, all three in one shot. That's why I say data entry people, it's very important that you come into intermediate with the strong hold on basics. If basics is not there, Swaha. What is closing entry? What is closing entry? All the nominal accounts at the end of the year has to be closed. All the nominal ledger. What is nominal ledger? Sale ledger, purchase ledger, interest expense, interest income. Trading P&L வர அத்தனை ஐட்டம் இருக்கு இல்லையா, அது ஒரு லெஜர். அது எல்லாத்தையும் நீ க்ளோஸ் பண்ணி எங்க எடுத்துட்டு போனோம்? P&L. If you don't pass a closing entry, அப்ப என்ன ஆகும்? அந்த பேலன்ஸ் அந்த லெஜர்ல கண்டினியூ ஆகும். For example, for cash, asset, liability, do you pass any closing entry? No. அப்ப அந்த லெஜர்ல ஒரு பேலன்ஸ் இருக்குமா? அந்த பேலன்ஸ் becomes next year's opening balance. Like that, for all trading P&L account item, if I let the balance travel next year, so in my current year sale, previous year ka sale will get added because opening balance is there. Purida. For example, let's say in year 1, sale is 10 lakh. Correct? So in sale ledger, what is entry? To cash, bank, debtor, 10 lakh. Imagine if I don't pass the closing entry. Sorry, credit side will come. I'm so sorry. This is sale account. Buy, cash, bank or debtor, 10 lakh. Okay, wow. Carried on balance, 10 lakh. Brought on balance, 10 lakh. What is this brought on balance? This is year 1 order data. This is year 2. If I allow the nominal balances ka value to travel to the next year aptina, if opening balances comes to next year aptina, then this 10 lakh will get added to the second year ka turnover. So let's say second year ka turnover is buy, cash, bank, debtor, 5 lakh. So what is my total sale now? அப்ப செகண்ட் இயர் சேல் லெஜர் பாத்தீங்கன்னா டோட்டல் டர்ன் 15 lakh காமிக்குது. ஆனா உன்னோட செகண்ட் இயர் டர்ன் எவ்வளோ? Only 5 lakh. So if you allow the nominal accounts to have the balance carry forwarded, it'll get mingled with the next year balance and not give the true picture. Hence, all the nominal account at the end of the year should be closed by transferring it to P&L account or trading account by passing a closing entry. What does it mean? To open loss account, you gave a debit. To close it, I have to give a credit. So in place of that, what should I give a debit? If you're taking this to trading account, then give debit to trading. If you're taking this to P&L account, debit P&L. This 40,000 loss was first recorded in the loss ledger. Now we're removing from that ledger and recording in the P&L ledger. Why? Because if all income and expenses come under one ledger called as P&L, only then I can get the profitability. To get profitability, what is required? Income minus expense. Income nenna all income. Expense nenna minus all expenses. So I'm trying to bring all the income expenses under one single roof. For that we are passing closing entry. Got it, not got it? At inter level, this much basics only I can discuss. I can revise the basics. I can't sit and teach the basics. We can teach, there's no problem. But we don't have time because inter portion is very vast. So basics is what you've done properly. Is we believe and then we allow you into the intermediate classes. So those who are sitting in the intermediate classes, we believe that you are strong with your basics. Chalo, great. One last question, sir. We're done. Ah, no. Next class. One second. Wait. I have target to finish today. This I'll finish and then only leave. Example 3. Example 3. Now, suppose at the beginning of the accounting period, the aggregate value of the asset. Now, all of you take your paper, pen, and start doing it fast. This is a practical question. Sir, last question also you said practical. Arey, this is pakka practical. Take your paper. It says that aggregate value of the asset, liabilities, and the equity of the trader is 5 lakh, 2 lakh, 3 lakh. I didn't understand this question only. What is asset? What is the value of the asset? 5 lakh. What is the value of liability? 2 lakh. What is the value of equity? 3 lakh. Suppose that the trader had the following transaction during the accounting period. During the accounting period, he had the following transaction up to these three. Balance sheet of the trader after each transaction is shown as how. Like, how do you show this in form of accounting equation? The question is not drafted properly. In the next class, I'll show the same question how it is asked in the exam. Example எப்படி frame பண்ணிருக்காங்க காமிக்கிறேன். இப்போ என்ன கேட்டிருக்கு அப்படின்னா, there is one equation called as asset is equal to liability plus capital. Yes or no? Tell me people, in balance sheet, no? In balance sheet, we always say capital plus liability is equal to asset. Why? Because we are following double entry system of accounting, where every transaction has got twofold effect: one debit, one credit. If one effect asset means second should be capital. Sometime it will be increase in asset and decrease of same asset. So because of this dual effect, always the total of this will be same. Always the total of this will be same. Got it? Not got it? Okay. Now, in 11th, when you solve this accounting equation, the format was what you know. Asset is equal to liability plus capital. But in CA intermediate, the equation changes. They are now telling, I want capital this side, take asset and liability together. So what is the equation now? Capital is equal to, from asset if I minus liability, I'll get capital. From asset if I minus liability, I'll get capital. In this equation, we are supposed to solve. Capital is called as equity. Got it, not got it? Now, how do we write this? Asset minus liability is equal to equity. Any problem? Format எப்படி தெரியுமா? Particulars, asset, liability, equity. It should be like this. It should be like this. Any problem? Particulars, asset minus liability equal to capital. Now, what are we supposed to record? First, record the opening balance. Opening balance of asset is how much, people? Opening balance of asset is how much? 5 lakh. How much is liability? 2 lakh. From 5 lakh, if I minus 2 lakh, what is the equity? 3 lakh. Any problem? No problem. Now the question says, this company or this trader has introduced a capital of 20,000 rupees. Can you please tell me the journal entry for capital being introduced? Journal entry for capital introduced. Cash or bank account debit to capital. Cash is which category? Asset. Capital which category? Equity. Donkey fellow, not liability. I'm shouting and telling from that time. Asset minus liability is capital. What is capital? Liability. Donkey fellow. Cash in bank is asset. Capital is equity. Yes or no? My question is, asset is increasing or decreasing? Business la panam vandite irundha asset will increase. To increase asset, I have to give a debit. Debit means plus. In this entire accounting equation, we are not going to apply debit and credit. We're just going to find out plus and minus. Increase and decrease alone. Whereas equity is increasing or decreasing. If owner gives more money, more equity will increase. Both are increasing. Increasing means what? Add or minus? Add. So both asset and equity should be added with same amount. Got it, not got it? Particulars lena mention பண்ணுங்க. Capital introduced. This is transaction name. How much is that? 20,000. Put plus 20,000. Increase in asset and plus 20,000 increase in equity. Now tell me the balance, please. What is the balance? 5,20,000. 0 here. So 20,000 minus 0 is same 20,000. Oh, 2 lakh. Sorry, 2 lakh that is. 520 minus 2 lakh is how much? 320. Is the equation properly matching? This side also properly matching or not matching? Online people, matching, not matching? Super. Okay, next transaction. Earned income from investment. Earned income அப்படின்னா income is received or not received? How does it matter whether income is received or not received? Tell me what is entry. Income received அப்படின்னா cash or bank account debit. Income is earned but not received அப்படின்னா accrued income account debit. In all the cases, these three are asset. And here asset is increasing or decreasing? Increasing. Add or minus? Add. Does it really matter whether money is received or not received? Pana receive ஆயிடுச்சு அப்படின்னா it is cash and bank to interest income. If money is not received, accrued interest asset account debit to interest income. Where did you study this? 11th ones, 12th ones, foundation ones. Now fourth time interval. Oh my god. To what? To income, to investment income, interest income, whatever you say. Okay, not okay. Now, very relaxed manner. Think what I'm. Just process the answer properly. What I'm saying. Listen. Income from the income ledger will go where? Will be transferred to P&L, trading P&L, bypassing a closing entry. So this income will be added to P&L, which will increase the profit. Which profit? Net profit. Net profit in return is added to the capital. So this is ultimately affecting my equity. My equity is increasing. Okay, not okay. So in any transaction, if you come across a nominal account, that nominal account, if it is of income in nature, it will increase the equity. If that nominal account is expense in nature, it will decrease my equity. Because income, profit increases capital, expenses, losses decreases the capital. Profits are added to capital, losses are deducted from capital. Got it, not got it? Okay. So one, I should add asset. Second, I should add equity. Got it, not got it? Okay. What is the description? Income earned. Okay. Income earned. How much it is? 8,000. So 8,000, it is plus 8,000 and plus 8,000 in equity. Plus 8,000 in asset, plus 8,000 in equity. Two donkey fellas left the meeting also. So much they're hungry, eh? 520 plus 8,000 is how much? 5,28,000. Minus 2 lakh. 3,28,000. Any difficulty here?
No, sir.
Why are you shouting for that, ma? Calm fellow, na? 5,28,000 minus 2 lakh is equal to 3,28,000. Okay. Third one. Don't get so happy that after this I'm going home. Because example 3 ka continuation is example 4. I'm not telling. Example 4 is saying that continue with example 3. 3 more example is given. So this is actually not example 4. It's a part of example 3. I'm not doing separate question. Arey Baba, see here, no. Continue with example 3. Now see here. After these 3, they've continued next to 3. Is it my fault? Separate question, a problem illa. They've combined with the previous one, boss. After this, we can go home. After 6 transaction, we can go home. 3 transaction here, 3 transaction next example. Total 6 transaction of same question. Okay. A liability of 31,000. Oh, now super question is. Listen. This will test your basics. A liability of 31,000 was finally settled on the payment of 30,000. I don't understand this question only. And purila. I didn't understand. Liability na creditor achkonga. A creditor in my books is worth 31,000. Finally settled for 30,000. Okay, wow. Tell me the entry for settlement of the creditor. I want entry for this transaction. So creditor is liability. To close it, I have to give a debit. So creditor account debit. How much? The liability is worth actually 31,000 in books of accounts. Okay. How much are you paying? Through cash or bank? 30,000. The money what you're not paying is your gain. Discount received is your gain. Okay, not okay. Creditor is a part of which classification? Asset, liability, equity. Liability. Increase or decrease? Decrease. Minus or plus? Minus. Bank is part of which classification? Asset. Asset is increasing or decreasing? It involves outflow of economic resources. So it is decrease minus. 1000 gain, what to do? Sir, this is neither asset nor liability nor equity, sir. Leave it, sir. I'll leave it. Gain will result into net profit. Net profit is added to the equity capital. So this is part of equity. Increase in equity. Oh my God. If this question is not satisfactory, no, go to 11th standard and take T.S. Grewal book. Much better questions are framed. Much better question. This is Amul baby question. Much better questions are there in T.S. Grewal book. Do that. Any question on accounting standard you can, any question on accounting equation you can solve. This is there in your syllabus, my dear friends. Chumma example, chumma kudukla. Idu irukku unga syllabus la. Next is what? Settlement of liability. Settlement of liability. Okay, asset decreased by 30,000. Liability decreased by 31,000. And profit increased by 1,000. Now, okay. 5,28,000 minus 30,000. 4,98,000. Then 1,69,000. Okay, then 3,29,000. Is equation matching? 498 minus 169 is it equal to 329? Please cross check that also.
Yes, sir.
Super. Okay. After example 3, this is your final answer. 4,98,000, 1,69,000, 3,29,000. Till this matched? Okay. In continuation to this, next is example 4. Wages paid 2,000. Wages paid 2,000. Entry, please. Wages to cash or bank. Wages is your nominal account. It's a expense or losses which will affect my equity. Expenses and losses will decrease my equity. So equity will decrease minus. And cash and bank is asset. While making the payment, my asset balance will decrease minus. So equity and asset both should be subtracted. Equity and asset both should be subtracted. Wages paid. How much? 2,000. Huh? Minus 2,000 here and minus 2,000 here. Tell me the amount, please. 4,96,000. 1,69,000. 3,27,000. Okay. Next, rent outstanding. What is entry for rent outstanding? Rent account debit to outstanding rent. Rent is nominal account. Expenses. Expenses will decrease my capital. Losses will decrease my capital. So minus from equity. Outstanding rent is nothing but liability. We are recording liability for the first time. It increases liability. So add liability. How much amount? Only 1,000. Chiller fellow. Outstanding salary. Asset impact 0. Liability increased by 1,000. And equity decreased by 1,000. Asset remains same, 4,96,000. That's all, people. Only one more minute. We are done. 1,70,000. What happened, ma? Outstanding rent. I thought salary. I'm just seeing whether you're awake or not. Sorry, Sleeping Beauty. Now, drawings 4,000. Drawings in cash or kind? Nothing mentioned means cash. Drawings in cash. Got it, not got it. What is the entry for drawings? Show drawings account debit to cash. Drawings is belonging to which family? Capital family. Means equity. When you withdraw the money from capital, your capital will decrease. Equity will decrease. Decrease means minus. The more money you withdraw, your capital will keep on decreasing. More money you withdraw, capital will keep on decreasing. Cash is asset. When there is outflow of money, asset will decrease. Both minus. Drawings minus 4,000.
4,000.
Where are you all going? I'm not done. Wait. Wait. 496 minus 4,000. 4,92,000. Okay.
Minus 1,70,000.
4,92,000 minus 1,70,000 is equal to 3,22,000. Is it matching? Not matching. 492, 172, sorry, 170 and 322. Oh my God. This is one practical question. This is one practical question. We have two more practical questions left. Both practical questions, what I'm going to do in the next class, is new that you have not seen in your life so far. Got it? Not got it? And that both are the highest important compared to what we have done. The question comes from this chapter, Apnina. The topic that I'm going to discuss in next class has got highest weightage. That's first highest weightage, and this will be the second highest weightage. Got it? Not got it? Chalo. You want to go home? What is the time? 8:40. Oh my God. You studied too long today, huh? Chalo. On that happy note, let's sign off, people. That's all from my side for this session. I'll see you all on Thursday, 5:30 p.m. sharp. Until then, bye-bye. See you. Take care. Thank you so much.